Okay, ladies and gentlemen, good morning. I think I am live. It is Friday, 10 April 2026. This is Jason with the Tactical Data Desk LLC bringing you the free live stream of the Gamma Exposure heads up display dashboard on NinjaTrader 8. I'm going to just check this live because, as you know, I am the guy with the face for radio, not very smart, and cannot tell if I'm live. I see you live. I think this is the. I see Breros 5459 posted earlier that here we are. I think I'm live. Be awesome if I could just get a thumbs up or not. Anyway, good morning and welcome to the free live stream. It is 9:28, 2 minutes away from the open. I've got the dashboard up. I've added the Delta 1 second speedometer to the top right. Hopefully you can see that up here. Uh, I am going to be building that out. I'm going to add a couple more things to that. I'm thinking about putting it on the bottom, have the 1 second speedometer, and then I'm going to add the 1 minute, 5 minute, and then also the 15-minute cumulative volume delta snapshot so that you can see what that is. So we are 9:29, 1 minute to the open. Looking good so far. All right. Diego, good morning. Tamer, good morning. Hope I'm pronouncing that right. If not, please feel free to correct me. If you're new to the live stream, thanks for joining. Again, this is Jason, Tactical Data Desk LLC. If you are looking for an entertaining channel, this is not it. I don't provide entertainment. I'm just trying to provide free data to enable traders to trade. If you're looking for someone good looking, this is not the channel either. If you're looking for someone attentive, this will be it. I'm kind of attentive. This is a hobby for me, not a day job. I'm on and off as much as possible. I do have other work I have to do. Sam, got it. Okay, Sam, got it. Thanks. Hey, MU3, good morning. It's so good to see you, man. Hey, here we go. Did we open? Yep, 9:30. 9:30, we just hit the open, and uh, the delta's all over the place. I got to check what the spread is. I have another dashboard that I built that I'm running. I'm recording that on a different screen. Uh, wow, the base is really 50 points. I don't know. Let's see what's happening with the shifts in the walls. Looks like we just moved up a little bit. Let me pull up Thinkorswim. I'll do that manually. Right. I got ES. I got to pull the calculator. Largest sell liquidity at 68.90 corresponds to the call wall. Sam, you got it. 535. Got to adjust the basis. So let's do that right now. As we get closer to the May expiration, we have to adjust basis. And now we are adjusted. That'll come back up. Spread that out a little bit. Looking good. Strong candles. So, you guys didn't know, I was off yesterday. That's why there was no live stream. I took my kids, my wife and kids went down. We were going to go to the zoo. It was just too far away. Traffic's really bad here. So we ended up going to the train museum, which was amazing. Absolutely amazing. We got back late and I forget where I was going with this. Train museum was great. Oh, so point was I was gonna get do a pre-market analysis today and go over the order flow volume profile, how I set that up, and do the zones. I didn't get down here in time, and then I had a work meeting early, so wasn't able to do that. But I'm gonna try to start doing that going forward. Oh, you got Bookmap, Sam? You like Bookmap? Sam's got Bookmap. What a great addition to the chat. Bookmap. Oh, look at this candle. So big wick right there. Selling here. Uh, You're in Austria? I'm in Georgia, United States, Georgia Eastern Time. You're in Austria? That's incredible. I spent a summer in Vienna, stayed at the Ritz Carlton, and I actually met Dave Matthews, the musician, and his band. He was doing a concert there. It was pretty fun. I didn't attend the concert. I really didn't know who he was. I only figured it out because I was sitting in the restaurant lobby area, and a bunch of guys were talking music, and I kept calling him Dave. And I heard of the band. I'm not very cool or popular, but heard of the band. And so I was like, "Are you Dave Matthews?" He's like, "Yeah, cool. Have a good one." From Boston, right here in Boston. Welcome to the live stream. Good to look at this. Now, what do we think is going to happen here? We got this is my tactical operational average that doesn't start aggregating till 8:55, so it throws out all the stuff prior. We've got a magnet at 68.60, a little bit of a wall there, not much. Biggest one's at 68.65 below that. The We are in positive gex, but the shift is negative 22. Keep your eyes. Oh, hey, welcome everyone to the live stream. If this is your first time, I'm Jason with Tactical Data Desk LLC. I provide this live stream free for everyone to see gamma exposure that is derived from SPX, and I plot this on the ES chart in Ninja Futures, Ninja Trader. God, talk free. You don't need to go anywhere and pay a subscription. You can watch it here, and I'll walk you through I also have special math that does that. If you're not familiar with gamma exposure, it's different than just gamma. And I know these lines say it's the yes 0 DTE call wall and volatility trigger, and while that is true, I use the shift is now negative 30, so keep your eyes on that shift. Um, I uh, I add a couple other extra features to the math to make this weighted a little bit more. So that's why my lines and my exposure walls, my exposure lines are a little bit more accurate. Wow. Right. So let's zoom out for a second. 68.65 could be that's a positive GEC exposure call wall right there, as the shift now is negative 34. Keep that in mind. Keep an eye on this 68.65. This is your ES level adjusted at the SPX price. So keep that in mind. So we are using SPX gamma exposure to trade ES futures on Ninja Trader if you're new to the live chat. And this is price adjusted. Keep that in mind. So if you want to see the SPX prices, they are in the heads up display here on the center of the screen. It is the underneath where it says Tactical Data Desk Command Center. Underneath is 0 DTE metrics, where then OPEX metrics, that's your options expiration. That's what that stands for. And that is your monthly expiration. So the third Friday of every month is what OPEX stands for. So if you just see OPEX by itself, that stands for the monthly expiration the third Friday. If you see quarterly OPEX, that obviously will be the quarterly expiration. So that happens 4 times a year. But just see OPEX, that's the monthly. Then we've got the SPX command node that tells you the SPX spot price. the SPX 0 DTE call wall, its gamma flip line, the 0 gamma line, and then the 0 DTE put wall. And then below that is the S futures command node for this contract. It's the contract. I think it's the is the 6th month May. No, June contract. Look, guys, I'm telling you, this is if you're looking for someone smart, this is not the channel to watch. If you're looking for free gamma exposure, this is the channel to watch. Not a very smart guy. If you really want to get the best out of that channel, I recommend you go out to your garage, find a cardboard box, measure it 2 by 2, cut it out 2 inches by 2 inches, and put it right over my face, right there in the bottom corner, and you'll get much more out of this channel than just watch the chart. For your ES spot price, your ES 0 DTE call wall, which is derived from your SPX gamma exposure. So remember how gamma exposure works for market makers. See, we got close to that 68.65. We called it. We got close to that 68.65. And then I'm not telling you we're headed back up, but the candles were pretty good, pretty strong. I mean, back up to the operational average line, and that could have been the pullback because we did have a little bit of a fair value gap right there, which we're touching right now. And I can turn on my fair value gap indicator that I built, and then it just has a lot of stuff. So I like to keep it simple, especially here in the beginning. So much. All right, then I got the pressure triggers and then the advice, which I'm not a financial advisor. And so that is just, not trading advice because I don't give trading advice. I just provide data to enable traders. That's all I'm trying to do. Integrity, excellence, and service. I just want to provide you guys free data to enable your trading, hopefully give you a competitive advantage. So we are in positive gamma at 288 million for gamma exposure. So they're long gamma and they're going to suppress volatility. But we're early. We're 9:39, only 9 minutes into the market. So that was the pullback, and we are headed back down to retest that 68.65 wall. Okay. Yeah, Sam, you're right. Sam's saying he likes Bookmap, which I agree with. Bookmap is awesome, and it does respond to the largest liquidity levels. Do typically respond to the call wall and the sell wall. Absolutely, there is a direct correlation. Oh, well, thanks. I'm glad you find this informative. That's exactly why I do it. I just want to give you guys a competitive advantage to make your days better. Thank you very much. I appreciate it. So, close to that low where we were, looking good. Keep an eye on that delta speedometer up there. Oh, looking green. Tested that twice now. 37. Do that. $38. Got to adjust that. Got to go in here. It'll be that call wall. Yep. I was a little off on my math by 3 points. I'm going to go in this weekend, and I'm going to have this automatically hit that basis. That's my fault. Could have put your buy order right there 3 times and got a couple. Right. see that peg out at 170 right here? We'll see if we can get through that one. What I would be looking for here at this level is 1 second delta split to be green, but go through that level. Keep hitting that up. Now, eventually, eventually that will not. Eventually that will break. Maybe. I don't know. We have to see above and below. Shouldn't have said. Good morning from Toronto. Leo, you're in Toronto. That welcome to the show. Good to see you. I had no idea you were in Toronto. That's really cool. Like we might be bouncing back up to this operational average, which is a special moving average, what it is, but it's not. I coded this moving average. It's not a standard move. So what you want to watch is the slope of that line. Get to it. Also, I have to adjust the size of the bars. That's one thing about Ninja Traders. Yeah, that says bar width 4. Sometimes it'll automatically bars larger than they need. Right. Futures Trader V1, you're in Toronto too? Oh my gosh. Hey, FTV1, check this out. I saw your comment on one of my videos last night, and I thought about it. Great idea. So, okay, FTV1, I want you to listen to this. You ready? So hopefully you heard that. So I am now live streaming the Schwab futures desk, and I'll live stream that into my live stream when I have to go off camera and mute my mic because I do work a full time day job. So when I do that, you'll be able to listen to this instead of nothing. Or I could just play Taylor Swift if you want. Your choice. However, that is that's you're doing FTV1, so you guys give back to me as much as I give back to you. It's I think we all are in this together. And that's what I mean by sense of community, and that's what I mean by giving back to the trading community. So thanks a lot. I appreciate that. That was a great idea. You had the idea. Thank you. Look at this. Pressed in that wall. Now we did close below it and open below it. So only up 2.5. All right. Decoupling. What's NQ doing? So let's look at see how the SPX command node, it says the 0 DTE put wall is 6,700, which is pretty far below top price of 68.30. Check out this. Here's Thinkorswim. Here's your 6,700 strike. Open interest, which is what was as of close yesterday, last night, which was 9 April, 61,000. Open interest on the 6,700 strike, and the volume now exceeds that. The volume in the first 20 minutes exceeds the open interest. Don't know if it's closing or opening positions. Yeah, volume exceeds open interest in quite a few. Here at 67.50, so I wouldn't be surprised if after a while that put wall shifted. Sizzle index is rocketed. Didn't know this was at the bottom of your Thinkorswim options chain. This is pretty cool. Built a dashboard like this that can overlay into NinjaTrader as well because it's very cool data. So it tells you the calls that were traded at the bid or below. So that's where you sell. Traded at the ask or above. That's where you buy. And then in between, passive orders. And then where the delta was. So this is your option delta. So 120. You got calls sold 55,000 compared to puts sold 74,000. Calls bought 61,000 compared to puts bought 60. Got another tool I'm gonna that helps show gamut. Okay. And we are a little bit lower. We did close below that. We are below the operational move. The sell pressure is the active 60.15. Pretty far. That's your SPX price. So delta. find the biggest. We are in between value areas right below the point of value area. Low blue dotted line that ends at the beginning of the volume node. That blue dotted line about 60, 57-ish. This one is your, yeah, that's yellow right there. The end volume is volume here on the low volume point of control is just the price level where volume was traded. It acted port, 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 broke through somewhat at distance-ish, kind of aligned to that wall. Price will go up the. This is just the morning settle. All right, so show you guys something, not to bore you, but I'm going to show you this other intraday. Ooh, North Carolina showed up. Good morning, Tacoma. I get you. We're all busy. This is something else I'm building, an intraday dashboard. You can see here, got the raw, it's got the gamma exposure, the raw prices, and then these are the synthetic call walls that are being built as of 9:30 a.m. And it's telling you what's happening with the flow. So it's saying the call wall is shrinking, put wall is growing. You can see the synthetic put wall. This is ES adjusted 68.68. So if you take 68.68, subtract 38, keep that math in mind. That's about 68.30 on SPX. Extreme test, major put wall, long scalps, put credit spreads, intraday flow. All right. So I'll move that. Now let me pull up. Thinkorswim again. Let's go to the 6800 SPX strike, which is what that was. Look at the volume, 11,000. So that is your synthetic 6830, sorry. So the 68, this 68.68 minus the spot price ES difference of 38 is 68.30. And look at your biggest volume of SPX strikes here at 68.30 of 11,446 now. So now I've done the math of gamma exposure to calculate intraday synthetic put walls and call walls, because remember how gamma it is open interest, which is a static number from the prior day. So if you're watching this option chain, that doesn't work or doesn't move. Open interest does not move. If you haven't watched the video on how what the legal mandate is for gamma exposure and the true mathematical equation for gamma exposure, check that out in video library. But again, this here is another heads up display I've built for synthetic gamma exposure that uses intraday options flow, which is a little bit more agile and more for scalping, I guess, than this heads up display, which takes into consideration some heavier weighted gamma exposure lines. So some interesting tools being built here at Tactical Data Desk LLC, where I fully believe in integrity, excellence, service, and just providing traders the best information possible. X2. Oh, Taco, I'm sorry. I'm sorry you missed the chart, man, but I'm glad we're back today. Ray, what's X2? I missed it. Right. Good. Everything's awesome so far. Let me pull over my other two dashboards just so you can see where we are on the GEX exposure. This has both the positive and negative GEX exposure right here, just so you can see. We got thin up above until we go to 68.50. That's the SPX price. This just shows the net. This one just shows the net. Thin again. And then this is your intraday GEX shift here. Pretty close to having my vendor license approved. Be able to make it available soon. All right. So Leo, we actually decided not to go to the zoo because it's like an hour and a half. Uh, by the time we got there, we won't be able to stay long for our youngest leave to go take a nap. So we ended up going a little bit closer to the train museum, which was amazing. I know trains sound boring, but I'm telling you, this museum is so cool. It's like the Revolutionary War and train museum, and it had all these interactive videos and interactive, say, toys, but things you can do with. Oh, what happened here? This is the 10 o'clock candle, and then they had a kids zone where they had a bunch of toys and cartoons related to interactive toys and videos for them as well. Then they had story time for the kids. So they had employees there reading stories that were telling stories and keeping the kids entertained and we ended up staying there for 4 hours, which well past our youngest. And then we ended up going to Whole Foods for lunch. And if you don't know what Whole Foods is, it's just a fancy grocery store, but they have amazing hot bar. 4 or 5. Did you see those lines just shift? 4 or 5 rows of hot bar food where they make it themselves, and it's absolutely fantastic. And we go there because the kids can pick out whatever they want, and it's quick. You don't have kids. You ever been to a restaurant that they're look at the menu, order, wait for them to bring it? That can be some of the most challenging times of your life right there. But when you go to a place like that, they just point and you just scoop, and you go eat. And then we got back. Guess what we did? Guess what we mowed the lawn. It was fantastic. And now here we are Friday morning and the lawn is mowed. And we're ready to crush the weekend because we got a birthday party to go to tomorrow. And we have another party, children's party to go to on Sunday. And so it's going to be a busy time. And plus, I have a lot of work to do here with the did you see this wall grow right down there, moved up? I don't know if there was new. We are looking lower. Yeah, FTV. Uh, you're right. That volume doesn't. And you can look at. Yeah, I know. I have the data pool that tells you if it's bought at the bid or sold at the bid or bought at the ask. I absolutely have. That's not a true tell way to know if it's a buy or sell. I mean, just you never know. But I have that data, and that's rolled into both of these. That's rolled into uh, uh, yeah, Big Dip. I do enjoy every second with them. Too many Oh, I've got that. This right here, the net premium over time. This is measuring the calls sold at the bid, calls bought at the ask, puts at the bid, puts at the ask, etc. I do track and measure, and it does fancy math to calculate the difference. Watching the live flow here. Got too many. We're back up to that. So FTV1, yeah, that's why I'm building all this stuff because I don't want to pay for black box stocks because you can get all this stuff for free, and that's why I want to provide it here because it's all publicly available data. Uh, you can either watch it live here, or once I get everything set up as a vendor on NinjaTrader and website, have it yourself, and won't be a need to look at my ugly mug every morning. Yeah. Okay. All right. So check. Lost my. Right. I gotta head on over to my other job for a little bit, but I'll be monitoring the chat. I will turn up the Schwab live desk.
That said, that a bearing tanker did make
No.
stand.
Well, I've never heard. Uh-uh. I haven't. Google it though. I have to. There's a couple tasks I got to review and boss on other jobs, so I'm gonna leave the up. I'll let you listen to the live stream. I'm gonna turn the camera off, mute my mic.
least quickly resolves, it doesn't resolve. We do think that longer term yields are going to continue to remain elevated. Part of that is government spending that's going on. Obviously, that requires a larger amount of issuance and potentially higher yields to support that. So we do think that that is one of the reasons we expect longer term yields to remain elevated going forward, Sam.
Yeah, and I suppose a lot of this depends on the duration of the war and the duration of how long inflation remains sticky and elevated and above the Fed's target as to the trajectory for obviously bond yields. Where are some of the opportunities then within fixed income right now as, people have been recalibrating the portfolio and looking for that cushion as we kind of just wait out what is seemingly a pretty sort of fragile and confusing ceasefire at this stage?
Yeah, and I think that because it is a fragile and confusing ceasefire at this stage, really what we're suggesting to many of our investors is to take more of an up in credit quality bias and hunker down and wait to see ultimately what happens. And by that, we mean focus on investment grade corporate bonds, municipal bonds if you're in a higher tax bracket in a taxable account. And then in terms of where on the yield spectrum you should be, we're targeting about a benchmark duration. So for the average investor, that's about 6 years, which we think is appropriate. And that can be an average of 6 years. So maybe a ladder strategy can take some of the guesswork out of interest rate risk and you spread that out. So we really think that now is not necessarily the appropriate time to take on extra risk in your portfolio or add to some of those more aggressive positions on the fixed income.
Great stuff, Coop. Always appreciate it. Thanks so much for joining us today. Have a wonderful weekend. Cooper Howard there, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research. Coming up, it's time for the morning trade, and we'll take a closer look at ServiceNow and the software sector, which is under pressure this morning. Morning Trade Live. We'll be right back.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the CBOE, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, more. Best of all, you can ask questions by chatting directly with interactive learning. Tune in live or on demand. Head over to schwab.com/coaching. Start learning today.
Most iconic trading floor in the world. This is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. 5-minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. The bell hits, react in real time. Opening Bell, live at the NYSE, right when it counts.
We're back on Morning Trade Live. So perhaps the SaaS apocalypse is not over just yet. The IGV ETF hitting a new low today after briefly rebounding from weakness. Under pressure once again. The software sector ETF down more than 25% so far in 2026. So it seems like we're not out of the woods yet. Chips are winning on the day as software gets smoked once again. Let's talk about all of this for the morning trade, specifically ServiceNow. Joining us for a closer look at this is Alex Coffey, who returns. And obviously, we've had this cut to neutral at UBS. And I would throw in there on top of that, it's interesting how Citi this morning downgraded 6 software stocks. You just wonder what they know right now, Alex. But just walk us through your thoughts here.
Yeah, and the downgrade to neutral almost doesn't highlight just how dramatic the repricing of their price target was, Sam. They slash it from 170 to 100. Now, 100 still implies a decent amount of upside on this stock, but the commentary that's embedded within this note doesn't really ease concerns. UBS says that they're no longer confident that ServiceNow is better positioned for the AI era relative to other application software names. They say that they're also hearing more and more anecdotes of non-AI app software budget pressure from different companies. So they don't believe that ServiceNow is positioned to insulate itself from the AI push. They also don't think, from what they're hearing, that companies are spending a bunch of money outside of AI on software. They say that they expect a skinnier than normal beat in the coming quarters for ServiceNow and more limited upside to guidance. So uncertain times indeed for these SaaS names.
Yeah, absolutely. And the fact that AI is potentially coming to eat their lunch. We thought we were sort of out of the woods, but clearly not right now, down 6.5% on this particular name. Thanks, Alex. Let's get to Dan Deming now and trade this name, managing partner over at KKM Financial. Dan, how would you approach an example trade for this one? I mean, has it changed from just a couple of weeks ago when it looked like these guys had sort of started to recover from those lows at the start of the year?
Yeah, Sam, I think a little bit. Yeah, it looks like there's going to be some more pain here before possibly this sector finds a bottom. But at the same time, eventually, I think it will. I think certainly, the headlines and the continued themes out there are driving this selling pressure. And, the market has a tendency to get irrational on both the top and the bottom end at times of tremendous amount of pressure and momentum and changing narratives, as you and Alex just pointed out. So I think, you know what, you got to be cautious here in this name, but ultimately I think that there will be a point where it would be much, if it's not here, beneficial to pick up the stock. So today's trade example is to a put spread, buying a put spread here at the market, currently around $84. They're buying the May 85 put, selling 2 May 75 puts. You can do that for about 50 cents right here. Now, what it does is it creates a capture zone to the downside as we possibly see further weakness, but it does create a break even at $66. So I think that that's still well below the market here. And if we do see some significant selling over the next month, this gives you the option to pick up the stock below 75. So right around 75. So I think, again, that's a more compelling level longer term. And the break even on this is down to 66. So it does give quite a range to the downside before it becomes a problematic trade.
And, with respect to this whole AI narrative and whether the scare is real, I mean, clearly it's big enough that Besant and Powell had to hold a meeting with some of these CEOs over at the banks to talk about this, Anthropic, Mythos, and obviously just how powerful that tool could potentially be. So, I mean, it's catching a lot of attention and it's been reflected in the markets once again, Dan. But just thoughts on the overall performance today as we, of course, head into the weekend once again with these high stakes talks?
Yeah, exactly. I mean, as you pointed out, Sam, certainly the software sector continues to be under duress, and the dispersion is something that I don't think we've ever seen. When you look at some of the other tech sectors holding up, particularly semis today, when you look at the dispersion between semis and software, it's just dramatic, the most dramatic I've ever seen. So I think when you look at the strength right now, semis certainly holding up and materials holding up today. So those are your pockets of strength in the market. Yeah, high stakes talk. But when you look at the general trend, Sam, overall, the market looks like it's calming down. You're seeing the dollar under some pressure. You're seeing rates finding some moderation and some upside momentum. Now, the Dow's under some pressure today due to some of the dynamics, but overall, the momentum has shifted. We're back above the 200-day moving averages in some of these major indexes. So I do think that overall, you're seeing a countering of some of those concerns. And if we do get any positive news out of the weekend, then it looks like the market's poised to move higher.
Yeah, I mean, it seems like things are calming down for now, at least. Do you suspect we could see any sort of money coming off the table, de-risking as we head into the weekend, or do you think we can probably hold on to what we're seeing right now?
It feels like we're going to hold. We've had a good run this week. The market's had a substantial comeback. And like I said, we're back above some key technical levels on most of the major averages. Now, a little bit of dispersion today, so that might cause a little bit of hesitation, but I don't foresee this market really selling off significantly as we head into the weekend, given the fact that the price action we're seeing crude continue to hold around $97, $98. Not seeing a big move in interest rates, and you're seeing the dollar continue to be under pressure. So that's an indication to me, at least for today, that we'll hold these levels, maybe not build on them, but at least hold them going into the weekend.
Yeah, and I think the S&P and the Nasdaq have both reclaimed their 200-day, 100-day, and 50-day, which is, technically important, as you say. And I mean, it feels like we're almost flat year to date on the SPX at this point. So something to watch. Yeah.
Yeah, absolutely. Yeah, I mean, it's a big comeback for the market, no question about it.
Certainly is. 68 to 37 right now on SPX. Dan, always appreciate it. Thanks so much. Have a great weekend. Dan Deming, their managing partner, KKM Financial. Coming up, we will take a closer look at the sectors on the move this morning and zoom out and to look at some global stories happening right now. Coming up on this morning, Trade Live.
Morning movers, be the first to find out what's shaping early market action. Check, Options Corner, Futures Focus, technical analysis. Morning Mover covers it all. Grab your coffee and every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis, actionable context. From inflation data to sector rotation, earnings to policy. It's a comprehensive market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back. Trade Live. I'm Sam Bardas coming to you live from the New York Stock Exchange. It's time now to take a look at some of the sectors that are moving markets this morning. So I'm joined by George Sillis today to get us across what is moving and shaking beneath the surface. Industrials really stand out to me, George. I mean, obviously they had their best day since April last year this week. Just walk us through what you're seeing there.
Well, I mean, I think interesting enough, and I talked about this last week, how there was sort of some pockets of strength before we saw the big gap to the upside on the broader markets from the prospective ceasefire with Iran. Looking at industrials, that's actually right now it's not trading the best today, but nonetheless, if you look at it over the last week, it's performed exceptionally well. The transports also had been moving to the upside on a relative basis to the S&P. They're showing some strength. And if you look at materials as well, copper, for instance, is also shining. And I think these are sort of leading indicators for the economy. We know that non-residential private fixed investment or capital CapEx in the industrial space and the technology space has been remarkable. And I think that's holding up the economy. Of course, we are seeing this massive divergence, this talk of the town right now between the software and hardware. It's amazing how this narrative just continues to play out. But with that said, the S&P, breaking above those moving averages as mentioned in your previous segment, you're looking at the stocks index, which is hitting a lifetime high. And if you look at the software names, you're looking at 3-year lows. I use from a longer term standpoint the 200-week moving average and the IGV, showing some pockets of strength, as we're moving throughout the day, but nonetheless trading below the 200-week moving average, which is quite bearish. But things can turn on a dime because we know that the narrative around technology and AI disruption can change very quickly. If you look at, for instance, too, the discretionary areas of the stock market still haven't reclaimed the 200-day moving average. I think it's important to keep in mind. And the other thing I'm looking at is Bitcoin having a good week, but nonetheless, it's still trading to the downside. And so, ideally speaking, you could say that perhaps the markets will retest that gap low going back to just a few days ago, possibly over time. But I'd like to see Bitcoin participate, which we're not. And I think that's an interesting one. That's a standout to me at the very least, from the standpoint of a truly risk-on environment. So we are seeing a risk-on. It just happens to be it's uneven, and that's where the challenge really lies in this market right now.
Yeah, speaking of uneven, I mean, you raised such an interesting point about where the money is going with some of that capex. I was speaking to Liz Ann yesterday, who highlighted that within the GDP, one of the things that really stuck out to her was the non-residential fixed investment, or the business capex, which has gone from 10% to 2%. So you see, obviously, these sort of clear-cut themes that are emerging in these markets, this dispersion, as you speak to as well, particularly across the semi-V software spread as well, like you highlight. Can we give any reason, I suppose, catalyst for why we're seeing financials under so much pressure today? Healthcare as well. I was speaking to Art Hogan yesterday. He liked these two sectors.
Yeah. Well, I think the financials interesting enough too. They're still relatively weak. You could also pinpoint the financials and look at them relative to discretionaries. Down still significantly this year. Really haven't reclaimed those technical moving averages. So that's something to keep in mind. I think the narrative around financial easiness is still strained because again, the inflation data that came in pretty much was in line, but we're still pretty significant above, Fed target level. So I think ideally speaking, the short end of the curve is going to maintain, its height. In other words, its strength. And we're seeing again some compression of the yield curve because the longer duration inflation expectations may have come down because of what's happening with crude oil. Then the yield curve is compressing, and effectively that's impacting the financials. I still think there's some weakness in the lending and credit space overall, as well as the discretionary space, but that's being offset by non-residential fixed investment spending, which is still very high, and I think the fiscal aspects of government spending are still robust. So there's a lot of things holding up the economy, and a lot of things that are challenging in the economy, and that's where this environment is very very fluid. But nonetheless, you have to just go with the trends in the market, which are still higher. And I do think that credit spreads, if you look at high yield versus lower duration treasury bond yield spreads, they actually follow the VIX very closely. And so we are seeing, if you look at a 180 day 4-hour chart, that spread has narrowed significantly since our recovery, much like the volatility index has, which is now trading below earlier today about 19.
Makes sense. And obviously, we'll get a clear corporate read from the financials when we start earnings in earnest next week. Really appreciate it, George. Thanks so much for getting us across some of those moves today. Turning to some international stories now. We got some inflation reads from other major economies today. Chinese wholesale prices rising for the first time in more than 3 years, snapping the longest deflationary run in the country in decades. The 0.5% increase in the producer price index, primarily driven by energy, but that hasn't spilled over into sticker prices yet. Consumer prices rose just 1%, lower than forecast, and a slowdown from February. Over in Germany, consumer inflation is creeping higher as well. Fuel costs starting to bite there. Headline CPI climbed to 2.7 from 1.9 in February. That's the highest level since January 2024, driven largely by energy again, which jumped 7.2%. Over in Japan, producer prices rose 2.6%, an acceleration from 2.1 in February. So the effect of the producer prices from the Middle East conflict is starting to show up as oil prices have surged. Japan is now planning to release 20 days worth of oil reserves as it tries to ensure domestic supplies there. And watching shares in TSMC this morning after the company saw a 35% increase in quarterly revenue after a 45% jump in sales in March alone. The contract chip maker for Nvidia and Apple raked in $35.6 billion for the first 3 months of the year, beating expectations and likely easing worries for now about demand being dampened by geopolitics, and the durability of AI spending sitting up comfortably. Coming up, it's time for Inside Out. We'll take a closer look at Meta and bring you an example trade when Morning Trade Live returns.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or retiring, you can count on Schwab for market insights, live support, powerful trading platforms, 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to focus, driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Let's go inside out on Meta. Joining us now is Ron Westfall, who's the VP, Practice Lead, Networking and Infrastructure, Hyperframe Research. So nice to see you. Look, obviously, we've seen this sort of turnaround in the stock this week. Do you believe that this is the turning point with what we've heard from Meta in recent weeks, particularly for the stock?
Yes, I believe so. I think the April bounce is definitely has momentum behind it. One key reason is the recent launch of their new Muse Spark model. And what's, I think, very important about this, it's very different from their previous AI model, the Llama model. And what is really going to, I think, grab more attention from the ecosystem out there is the fact that this model is really multimodal, meaning it's enabling users to create their own visuals, to create not just getting query responses in a very rapid fashion, but also to really look at many different ways, being able to, for example, create new ads that will definitely drive more of Meta's advertising revenue. And I think this is going to be something that will basically ensure that Meta will have an enduring stock performance over this quarter as well as throughout 2026. And this is bearing in mind that, yes, Meta is definitely cranking up the CapEx in order to build out its AI infrastructure and is also dealing with legal cases. However, I think this will outweigh those concerns due to the fact that Meta is well positioned to take advantage of the rising AI tide.
Yeah, we certainly saw the reaction off the back of the last CapEx announcement in the previous earnings season. So let's see if we see that this time around. But is there anything in the last quarter, do you think, Ron, that gives us a sense of getting the ROI on that? Because we continue to read the headlines about, obviously Meta splashing the cash. The latest, of course, another $21 billion with CoreWeave now. What do you make of all these massive spending plans?
I think it's something that is not unique to Meta. However, I think Meta is even better positioned than some of their peers, such as Microsoft and AWS. Looking, for example, at their historical stock performance, they, I think, are a pretty good value because their PE ratio is actually below their historical level. It's around 23. And right now, it's fluctuating between 19 and 21. So looking at just that metric alone, I think Meta is a good value. But also, I think, there's I would say, a bounce back possibility here in terms of that their first quarter of 26 is actually a much better performance than, say, at the end of 25. And so the CapEx, I think, is what's different from Meta is that they're already seeing a return on investment, and that is specifically to the ad revenues. And this is good news because Meta is addressing a total addressable market. $500 billion in 2020 alone. And that, I think, is just for digital ad revenues. And you break it out into the social media segment, which is where they definitely focus, courtesy of Facebook, courtesy of WhatsApp, courtesy of Instagram. And that alone is a $317 billion market just this year. So clearly, I think Meta is better positioned as a result to take advantage of their AI investments sooner than some of their peers.
Okay, and then of course Meta is expected to release earnings on April 29th, so we'll be watching. Ron, really appreciate it. Thanks so much for breaking down your thoughts today. Ron Westfall, who's from Hyperframe Research there. Let's trade Meta now with Tom White, host of Fast Market. Obviously, we've seen a nice little recovery. Ron just sort of walked us through where it sits in this whole AI race. Just walk us through the approach here, Tom.
Yeah, it's had some positive news over the last few sessions here, up about 10% so far this month alone. So yeah, the expectations are starting to get up there a little bit. 3.6 billion, daily active users across all their platforms. They've got the eyeballs. They're just spending a lot of money on AI. So I looked at a strategy that's, you can take a directional bias on it, but you don't have to be aggressive about it. They report earnings at the end of April, so I want to avoid that earnings event while still taking that directional bias. So I looked at something a little bit more neutral, a little bit more passive, neutral to bullish short put vertical here. I went out to the April 24th weekly option, so just 14 days to expiration. We're going to avoid that earnings event, which takes place the following week, where I'm going to sell the 610 put that's out of the money to the downside, off down about 20 bucks from the current share price. And then against it, because I want to stay risk defined in a high price stock like this, buy the 590 strike put. So a short $20 wide, neutral to bullish put vertical. You're going to collect roughly about a $4 credit on that put vertical. That means your potential profits, $400 per spread with about $1,600 in risk. Well, why am I risking so much to make only $400? Well, it's because of the probabilities are in your favor. So you have better odds on this type of strategy while still taking that bullish sentiment. Your break even on this one goes down to 606 over the next 2 weeks. That's over 4% below the current share price of Meta Platforms. So there's that cushion. The probability that that short 610 strike that you're selling in this short put vertical is out of the money at expiration, about 70%. You've got a 70% chance above that 610 level, which is what you want. The idea here is you sell this put vertical for $4, it goes out worthless, right? You get to keep that $400. But as we get closer to expiration, because time decay works in your favor, above 610, maybe it starts to come down in price. So you could close it early if it starts to contract in value prior to expiration, if you want to avoid maybe some event risk or just duration risk on this type of trade. But it's more passive. I think if you look at it in a baseball analogy, you're trying to hit a single, trying to hit a double, maybe take a walk on something like this. But the probabilities are in your favor on this one if you expect Meta Platforms to remain above 610.
Good stuff, Tom. Thanks so much for that. Meta sitting up 0.5% right now. So we've got some cautious optimism in these markets for this Friday morning. We're seeing some range-bound trade. Obviously, we've had a hot CPI read, range-bound trade, as I mentioned, fragile ceasefire, consumer sentiment at a record low. So that perhaps is behind the mixed performance here. On track, though, for back-to-back weekly gains. Let's see if it holds. We're watching the high-stakes talks in Pakistan this weekend with, of course, what is going on in Iran. But wrapping up another busy week. I'll catch you later on Market on Close at 3 p.m. Eastern. Thanks for joining us. You've got Trading 360 up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network. Real-time market coverage, expert strategy.
Opening bell. Opening bell. Rock you.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
Shows built in action, break it all down in real time and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Insights, data, veteran traders, financial streaming live.
Schwab Network, 24/7, any screen, anywhere. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Good morning. We are 90 minutes into the trading day and welcome to Trading 360. I'm Jenny Horn coming to you live from our Chicago headquarters. Here's what's coming up on today's show. In our 360 Spotlight, we'll take you through some of the data that will highlight how consumers have been impacted by recent inflation and what companies can do to capture audiences. And Taiwan Semi has reported record revenue ahead of earnings next week. Amid growing demand for AI chips, George Tillis will bring us the report and an example trade in our disruptor. And speaking of earnings, our 360 round will take you through the expectations for the upcoming earnings season and how the conflict in Iran is impacting the bottom line. Now let's take a quick look at the overall markets as we have been pretty split today, after seeing some strength at least firm up here in real time as we are now higher in 3 of our 4 major averages. 0.2% higher in the S&Ps. Nasdaq's up about 0.4%. The Dow, our only name right now in the red, down 0.3%, and the Russell 2000 slightly higher, basically unchanged as it stands. Futures products, we are seeing a bit of some strength trickle into the 10-year today. U.S. dollar, another day of weakness, and we also are seeing gold with some weakness as well. While crude oil, first time in a long time we've seen actually a modest move in crude oil today. So down about 0.7%, and Bitcoin also slightly higher. But now for a look at some of the top moving stocks in this overall market, I'm joined by Alex Coffey, of course, my co-host on Next Gen Investing every single day. And so as we kick off the show, we're looking at an Autodesk downgrade. Citi's saying that there's a lack of catalyst for the next 12 months or so.
Yeah, and this isn't just Autodesk, Jenny. This was 6 names included in this note. This is the analyst Tyler Radke, but DocuSign is in there, Autodesk, kind of the 2 most notable, I think, names that we talk about on a regular basis. But as you mentioned, he did mention, hey, these are all just cut to neutral, and most of them are good companies. They just got nothing in the next 12 months that seems to be exciting, or as you put it, catalysts. He does believe that most of them are well positioned long term. However, he says the more selective approach would allow for investors to be more agile, and in his case as an analyst to be a little bit more agile with their ratings as they're looking for signs of where the AI acceleration is ultimately playing out. So we've talked about this with some of the cybersecurity names as well. We talked about a couple of those on Next Gen yesterday with Rick, where you're seeing this SaaS unraveling, the SaaS apocalypse, or really just software pressure, pretty disparately impactful, having disparate impact depending on how exposed the street feels you are one way or another. It does say that privately held AI companies are on track to add over $100 billion in net new revenue in the years ahead, which is going to potentially be pulling that away from some of these others. I was talking about ServiceNow earlier with Sam, Jenny, and one of the points that the analyst from UBS made was the more that they're talking to companies and doing their channel checks, what they're finding is the spending is not going to traditional software. It's going into investment in AI because they feel if they don't make those decisions, they're going to fall behind. And so, unfortunately, those budgets aren't growing. They're just being diverted, and it's really having an impact on companies like Autodesk, down 4% today. Now, analysts as a whole, 87% say to buy this name still.
That is an insane fact to me because, again, we've seen this name. It hasn't been necessarily even just to blame for the software pullback. I mean, this has been a pretty long felt, really downturn substantially. We did hit new 52-week lows today. And so a lot of these names I saw, and they're covered this note today, were the names I traditionally think of, like that saw that forward-looking or pulled forward growth, frankly, during the pandemic. And so do you assess this name in sort of like the near term, or do you look at the big picture? Because the longer term time frame only points to more pain.
Well, one of the biggest things that Autodesk does is this computer-aided drawing that's sort of used for drafting building plans and things within more of an engineering and architecture world. Well, high skill level, we've talked about this with things like Photoshop and Adobe, but it had a niche. Well, that niche is being disrupted by Claude or OpenAI and these programs that are able to kind of span across multiple different sectors. So what used to be beneficial to be a niche is now kind of hurting these companies because they got nowhere to hide if AI comes to disrupt their space. If they're not the ones who develop that technology, they got nowhere to go.
Yeah, that competitive moat is what I always use for Adobe, but it's also, I think, it applies to all these names. That is definitely starting to wane. I mean, it's been waning for quite some time, but appreciate it, Alex Coffey, my co-host, for all of that insight. And now to bring in our next guest, that's Dale Smothers, President and CEO of RDS Wealth Management. So Dale, first and foremost, thank you so much for joining us on this Friday. How do you think through the positioning in the market right now after this latest relief rally, of course, tied to the hopeful piece that we'll get at least more clarity on next week? But how do you think through the market right now?
Yeah, the pathway to peace showed us the optimism, Jenny, that I think the market has been looking for. They're optimistic. The buyers are coming back to the picture here. And so we are looking through. That's the key word. We're looking through this short-term blip in oil. I think you've even seen that with the CPI print. Recent print that came out this morning, the first print that we've seen with how this war is impacting inflation. It was high. It was higher than we would hope, but it was on the spectrum of acceptance, which is why you've seen the market continue to basically just shrug it off as if this is a short-term blip. So right now we are positioning, we're considering this almost a planting season. We've been saying this for the last 2 to 3 weeks. This is the time to position money for our clients. If you've got clients, for instance, that are speculative and maybe need a little bit of growth in their portfolio, we really like the names Amazon, Apple, we like NVIDIA. These would be something we would consider the toll booths for AI. And as that traffic picks back up, we think sentiment changes here over the next couple of quarters. You're going to see these names that have almost become value names start to become growth again. We also like playing dividends for our clients right now. We work with a lot of clients, Jenny, as you're aware, that are close to retirement or into retirement. That stable income is what they're after. So we like names like JEPI, which is an ETF that trades covered calls on blue chip names. We like HDV, a basket of blue chip names that pay strong dividends. And in particular, some names that we like are Royal Caribbean. We really like that, and Johnson & Johnson going into earnings this season.
Okay, and so given all of the, I mean, like pretty positive catalysts you mentioned in this market right now, how do you also then think through, of course, approaching that deadline coming next week? We see volatility start to pick up.
Sure, and I think that's almost inevitable at this point. We are going to approach that deadline with no clear, in our opinion, no clear resolution, but the de-escalation in itself has given reason to be optimistic. So we're going to see volatility creep in a little bit closer to the end of next week. And again, I think that's just a time to take advantage of these names that perhaps are on sale. Depending on an investor's portfolio, you can look at this as one of two different ways. Either a time to reevaluate how much risk you actually want in the portfolio, and when we come through this, and we will come through this, then take action. Don't make any panic sales in a buyer's market, which is what we're in right now. As we approach the end of next week, reposition your portfolio for optimism. And if you need a little bit of growth in names that are probably going to go on sale, like in the tech sector, probably be one of the first ones to be hit, use next week's volatility as an opportunity for you. Again, looking for, by the end of June or July, we are looking for the S&P 500 to be closer to 7,000 points, Jenny. We believe that this market wants to be optimistic, and it will see through this Middle Eastern crisis.
Okay, and so say we do, of course, hopefully see through this crisis happening overseas. What catalyst do you see then continuing to propel? I mean, the overall market's higher, like you mentioned, S&P's at 7,000 by July. So you're obviously expecting a pretty solid earnings season, which we'll get a full scope of really next week. But it's going to be a busy week next week, I'm realizing.
Very busy week next week, Jenny, and earnings are the catalyst. The market follows earnings. The market is trading on what we expect to be double-digit growth in earnings this year. I think that propels us higher in 2026. Do we see and close, let's say, December at all-time highs? That's still yet to be seen, because what's going to then be our volatility in a later part of the year is going to be the midterm news cycle, which brings its own bit of volatility every time that happens, especially if we see the House and Senate potentially being flipped. So this volatility will continue through 2026, but earnings takes the market higher.
Okay, and also another thing that could obviously have a more short-term impact. Everything does run through oil. The fact of the matter is, Strait of Hormuz is still not fully open. So as far as sector exposure is concerned, how do you balance that exposure, considering nothing is really immune from this? And I think the time frame and some of the long-lasting implications are still not being fully read through.
Absolutely, Jenny. And so let's be realistic here. I am optimistic. I am a probably even forever bull. The market moves up and to the right historically, but we do have some things that could change that in the short term. And oil is the biggest story. If oil stays at $100 per barrel or more for 90 days, now we've seen a little bit of a relief. A pressure valve has been released here. But if it stays higher for 90 days, the market suffers. And what I told you is going to take the market higher will then start to take the market lower, which is weaker earnings. We believe strong earnings take it higher. If oil comes through and inflation begins to be a significant issue, and God forbid that we see a rate hike become a reality, the market will not like this at all. So we have to get the Strait of Hormuz open. We have to get the Middle Eastern crisis behind us. And I think the world also realizes this. How do we play this for clients that want a little bit more stability? The simple answer here is options. We like options around the S&P 500. We can protect some downside and still provide upside on all sectors in the S&P 500. Diversity is key. Value, value, value. And like I said at the beginning, I think you've got some tech names that have become value names. Look for opportunities. Stay calm.
Okay, and I liked that you called this planting season, because obviously with a lot of the recent valuation resets, things are looking a bit more on sale, at least at these current levels. I know this week hasn't necessarily helped that, but say you were more risk adverse and you still feel like there's this major threat still of uncertainty. How do you go about balancing income with that stability? And you mentioned some of these ETF names that provide obviously that diversification.
Yeah, let's back up and look at a name like JEPI, for instance. This is a fund, and we do this for our clients on individual names as well, selling covered calls on overweight positions. But if you just wanted to do this, let's say, with the idea that you need some stability, you need some income, a name like JEPI right now is providing 8+% yield overall, because you're not only getting the blue chip company dividend, but you're also getting the covered call premium. And the worst thing is that the market goes higher and it gets called away from that particular ETF, and they're just going to recycle that money into a different name. Holding blue chip companies right now for our clients is what we're doing. Holding blue chip companies, selling covered calls to collect the additional premium. You've got a strong dividend, additional options premium, it equals income. And then again, one of our key holdings in our income portfolio is HDB. It has performed very well. I wouldn't necessarily call it defensive, but it's got a name, several names in it with moat around those names, and they pay strong and increasing dividends. You go back to a year like 2022, it has been contrarian to the market, still doing well when the S&P 500 is high. But if you look at a year-to-date chart alone, Jenny, I think that tells the story of where the S&P is versus a name like HDB. And again, that's just the value and dividend play that we would recommend for our clients here. I want to be very careful. This is not a blanket recommendation, but if you've got an opportunity here to take advantage of income and stability, a name like HDB provides that.
Okay, and I like that, looking at some of these, I mean, maybe lesser discussed, but still very important ETFs and sort of diversifying, broadening out that portfolio, which I do think is very critical right now. But really appreciate it helping us kick off our show today on this Friday. Dale Smothers, President and CEO of RDS Wealth Management. Thanks so much. Now, plenty more to come on Trading 360. Next, it's the big three stocks, 3 charts, and 3 trades. Rick Ducat will go through the technicals, and Tim Bowen will take us through the trades for Air Test Systems, SanDisk, and Intel. That's next on Trading 360.
Most iconic trading floor in the world. This is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. 5-minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. The bell hit, react in real time. Opening Bell, live at the YSE, right when it counts.
Got your smile.
Carl.
Yep. Your #1 broker's here to welcome your little dependents.
Actually, invest with Schwab now. Everything we need.
I can set up her college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement.
All this Schwab is everything making me cranky.
Somebody needed help.
Schwab!
Invest your way with Schwab.
Welcome back to Trading 360. I'm Jenny Horn, and it's now time for the big three. 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts. And here to take us through the trades is Tim Bowen, Chief Technical Trainer at StocksToTrade.com. So great to see you both, Tim. Always love sort of closing out the week with you on a Friday. And a lot has happened since we spoke last. So curious your thoughts here on the overall market.
Yeah, thank you, Jenny. Good to see you again, Rick. I do want to start out with that 2 weeks ago, Rick will remember this. Actually, I had to apologize for Marley because I was so amped up and like totally fired up. Actually took the red eye back from LA last night. So I think I'm on 31 hours of no sleep. So if I seem a little lower energy, I apologize for that. But the reason I took the red eye was specifically because I mean, I know the market's scary to a lot of long-term holders, all of this macro stuff and news and chop, and look at the S&P, and we're still stuck in this range from 6 months ago. But trading-wise, short-term, and that includes day trading and swing trading, including the stocks I'm going to talk about today, is just ridiculous. I mean, the last, particularly 3 weeks, just the velocity of the moves, the predictability, and it is a hot traders market. Now, again, I know a lot of your office or a lot of your audiences kind of more of that, buy and hold. But one thing I love, I mean, I buy and hold as well, but I use day trading as a hedge during times like this and capitalize on that volatility. And I mean, this is, I know this has kind of been the lost year when it comes to, blue chips and indexes, et cetera. But short-term trading, just unreal. And I'm actually kind of looking forward to a break at some point so I don't have to take the red eye.
31 hours of no sleep. I can relate to that all too well. I'm also not a very good sleeper, so I understand, but definitely still seem like your usual self. And so we'll go through now our first trade here, Air Test Systems. How do you think about really trading this name here after it's been considered, I mean, one of these AI top players? It's closed out the week. It's expected at least pacing to close out the week strong. And right now, it's overall, it seems like original chip thesis still remains intact.
Yeah, this is one of those stocks. A lot of the ideas I bring you guys, I pull from a swing trade AI that I developed actually about 2 years ago now. Could find it. But what it looks for is particularly chart patterns, which, Rick is the man when it comes to that, but also hot sectors, themes, etc. And going back a week ago, we kind of had this hardware bounce, as I call it. Now, people that watch my segment every week know going all the way back to January, started talking about the convergence of local AI. I'm running a Mac Studio and a couple of Mac Minios with my local models, as well as obviously we know the data center thing. But you go back a few weeks ago and all of these, we kind of had that hardware bubble where a lot of people were saying that, all the chip stocks, all the memory stocks were overdone. And then AEHR Monday night broke it all down with my AI. We were looking for a dip. We got that dip on Tuesday into the basically low 50s, and the stock has took off since then. And I just think when you look at some of the other names I have for you today, but also the Microns, the Nvidias, the Marvells, I mean, they had that dip, but they're all pretty much back testing the highs. And even though AEHR is a big breakout this week, the thesis is kind of playing out across the sector.
Yeah, no, it definitely is. And at least also ending the week on pretty strong footing here as we're up about 0.5% on the session today. And so, Rick, when you assess the latest technicals, I mean, this is one of the stronger, really momentous trends we've seen across all the names that we discussed.
First of all, I can definitely understand how day trading and no sleep go together sometimes. I've been there. But
we're in good company here.
Yeah, exactly. But we can see here that we had our earnings event recently here, our white dashed line going vertically. So we even before that, though, we were breaking above some of these notable high areas. Our best close came in right around 44 in mid-February. Now we have had this explosive push to the upside. Now, so far, our high for the day has come in 72.50. That's where our red line is. We have a very steep trend line sloping upward here. One level to note was another gap near about 53 here. So you could, I'm not saying it's going to break downward here, but if we do start to pull back, oftentimes these gaps can provide a useful area to keep an eye on for potential buying opportunities, support, whatever your trading outlook may be. There's a reason traders commonly keep track of significant gap levels. So when we look at our moving average picture, 5-day weekly EMA in dark blue here comes in near 61.28, lines up with our trend line. So that could be one notable supportive area to be on the lookout for. Really, though, given the speed with which price is moving, moving averages are not super helpful sometimes in these cases. They take a little bit of time to catch up. That's the inherent issue with any kind of lagging indicator. RSI in this case, though, is seeming to hold up fairly well. We're still continuing to make a relative highs so far. Our trend line is still in play. We are still in the overbought area. So break below our trend line and below that 70 area would be more of a bearish signal here, at least in the shorter term potentially. So finally, our volume profile study. Again, when you have these very fast moving prices, it can be more difficult to assess the notable trading areas. Things were much heavier all the way down here between about 36 to 41 roughly. Notice the very large volume spikes we've seen recently as well. All those arrows represent volume 50% above the 50-day simple moving average of volume activity. So very heavy trading during a large move to the upside typically is regarded as a signal of longer term conviction here. So kind of to go back to the buy and hold mentality here, this would be one of those situations where it seems like there's been some major fundamental change. So this could be an interesting one to watch going forward in the longer term.
Okay, no, absolutely. And it's definitely been an interesting one to watch over the last, week or so. But Tim, let's move to your next trade, which has also been a very interesting one to watch. That's SanDisk. I mean, how do you think through trading this name if you believe, say, the memory story has not really changed despite some of the pushback we've seen from short sellers?
Quick point I do want to make. I really love Rick's breakdowns, and I appreciate him, urging caution. That stock has gone great, straight vertical. Rick and I have been doing these trading 360s for about a year now. And, he knows, in the wise words of Sir Mix-a-Lot, listen, I like big breakouts. I can't lie. Definitely look for pullbacks on that stock. Now, moving on to SanDisk, this is that stock that, obviously one of the best performing stocks going back to September, but really kind of went into consolidation. We had a lot of kind of fear come in when the news hit that OpenAI had kind of backed off on that big memory order. But even though SanDisk pulled back, I mean, it just was not that much, and just kind of pulled back into that zone, held that. And then the last week or so, we've considered seeing that reclaim. So again, back to trading smart. Pretty big move here for a big name. And, if you look at that 1 year chart, it's up a lot. But if you can get pullbacks into that zone where it was, I just think that that's now going to become support. You'll just get a bounce back off of that.
Okay, and the market likes what you're saying here because we are basically now unchanged on the session and recovering some of at least the earlier session losses. And I am so going to steal that. I like big breakouts and I cannot lie. And so as we now look to the chart, another big breakout here. And I know, again, has been met with some resistance, but still long-term uptrend has been so intact, Rick.
Yeah, I mean, just think about not even AI data centers, forget all of that. Just think about how much memory and storage you need for any kind of security camera, any kind of police body camera, anything.
Anything you do.
They all need storage, like everything needs it. So when we look at this chart here, what we're seeing is another break to the upside here. We did have these highs around here near about 750 roughly here. 738 was another breakout level. 695 stood out to me as well, kind of a general high and low point. This is another of those charts where we have a very narrow, very steep channel to the upside here. We topped out just shy of 874. So again, keep track of the gap levels, keep track of any notable low points here. When you do have these explosive moves to the upside here, the pullbacks can be quite vicious. I'm not saying that's going to happen, just to be very clear here too. Just saying if you are having more of a bullish outlook, those can be prime buying opportunities for a long-term view, if that is what you're trying to go with in your trading here. Once again, we have our blue 5-day EMA quite close to our trend line here. Our teal 21-day EMA 706, a bit below there. RSI a little shy of our overbought area here, coming in near 68, but our red downward sloping trend line has been broken. The bulls would want to see price and RSI making new relative highs in tandem, and for the RSI to break into that overbought area, typically regarded as a sign of strength in a trending market here. Now, our volume profile study shows that we have dropped off significantly on our trading volume right around this gap level, which is kind of pretty much what you'd expect. So once we start getting back around like 710, 700, things pick up. The major node, though, around 570 to 670 roughly. A big range here, but that's where the heavy trading activity was. These volatile names can see big ranges of notable activity.
Okay, and last but not least here, as we do shift our focus to our last name, which is Intel. And so, Tim, how do you think about Intel, especially considering the stock has spent much of this year, at least so far, being pretty sideways?
Yeah, so I first shared this stock on the big three after the government took their stake, back in September, October there. And, it was just one of those ideas like I actually dropped out of college to start a computer and internet company. We installed thousands, probably tens of thousands of Intel chips. But it was a company that kind of lost its way. over the last few years, and then that government stake. And then what I love was the fact that they had kind of really committed to bringing that chip manufacturing back to the US, something that said a lot of people said could not be done. I was always very skeptical of that. I just thought there needs to be a willingness to do this in the US, and we're starting to see that turn. And, it's kind of playing out now. Now, this stock, kind of collected a lot of quote unquote haters as it went sideways for all of 2026. I still held pat, still like the idea. And we got to follow through, about a week or so ago. And I just think it's a good story. I love, obviously very pro America, very pro, building things here. And I just think that this is kind of that turnaround start for Intel by capitalizing on that. And I think the chart going back to where the government took the stake has reflected that.
Yeah, no, absolutely. And I will say, I'm saying this name stuck sideways, but hey, we're at least up 2.2% today. So good place to at least close out this week. And so last but not least, as we do look at the recent move we've seen in Intel, I will say that compared to past years of like volatility and uncertainty, they've done a great job reshaping sort of the market perception of some of their earnings releases and just, again, overall day-to-day headlines.
Yeah, a major computer chip foundry is not something you just wake up on a Tuesday morning and be like, oh, I'm going to start this. Let's just, do this. It's very intensive in terms of skill and labor and just everything. And
like government,
exactly. It's a very difficult thing. So it's very notable that they're one of the only big domestic suppliers here. Notable old high, 54.60, gap level here, lining up with that same point. The gap began 53.27. Highs today, 63.39. Very similar picture for these charts. Very steep, very narrow, upward sloping trend lines and channels that we've seen. So strong momentum to the upside in all three cases. Here, though, we can see that perhaps maybe starting to test that trend line. Still overbought, still very high. 76 is a pretty high reading for the RSI. Again, 5-day dark blue weekly EMA 58.18 could be a point to watch out for. Finally, our volume profile study shows a tiny small pocket here near our gap level around 53, 54 or so. Trading really picks up much more heavily around 49.
Okay, and Intel, actually, as we're speaking, paring back at least some of that strength, but still up 2%, in a name that has actually, I think, outperformed a lot of these skeptics' recent expectations. So appreciate you both, Tim Bone, Chief Technical Traders at stockstotrade.com. Go get some sleep. And Rick Ducat, of course, thank you both so much for being here. Now, coming up next, we're going to spotlight the latest in consumer sentiment, really how the consumer is feeling, given all of the geopolitical uncertainties still weighing on these markets and economic data.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The platforms and tools webcasts are designed to help you broaden your knowledge, platform features, and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching. Start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Check, Options Corner, Futures Focus, technical analysis. Morning Movers covers it all. Grab your coffee and every trading day at 8 a.m. Eastern, only on Schwab Network.
Schwab coaching is concepts brought to life in the real world.
Absolutely world class. We have coaches who have been in the industry, around the industry for a long time. We have different formats because people learn differently at different times. We have webcasts running through YouTube all day, every trading day.
We've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible is that? And it's free.
Hey, Andrew. Last year, my dad had a stroke. Big shock. Person that I've always seen, of course, in our family, vulnerable.
Had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. Probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you actually care.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are. Welcome back to Trading 360. I'm Jenny Horn, live in our Chicago headquarters. Let's check out on these overall markets, though, as we are seeing some strength at least still trickle in. We are up just over about 0.1% in the S&Ps, the Nasdaq leading out in front, which has been pretty much all day, up 0.4%. And the Dow is down 0.3%, and the Russell 2000 is still pretty much unchanged, but at least we are seeing that green arrow there. Checking in on some of these futures products, we are also seeing some interesting actually performance from crude oil, which as the trading session has gone on, futures are firming up here about now higher by 1%. Well, we also are still seeing that strength also in Bitcoin up to shy of 1% and holding at least below that key 73,000 level. US dollar, another day of weakness. Now, all of the major averages are pacing for a winning week as it stands, with the Nasdaq up now 4.7% just this week alone. If we check in on, again, overall week performance, S&P's up now about 3.8%. Well, the Russell has also gained 4.2%, and the Dow, the smallest move of the group for the week, up still 3.3% as we brush off any concerns, but obviously looming deadline next week and a slate of earnings to get through next week. So we will really leave it there, and we will come back and discuss further really what to focus on here as far as overall market trends and some individual stock stories when Trading 360 returns. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. You like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to the education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching. Start learning today.
Mom, when my grandparents moved here, did they know what our family would?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Bob has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Welcome back to Trading 360. I'm Jenny Horn here in our Chicago headquarters. Let's head out to the New York Stock Exchange now for a check on the overall markets with Nicole Petalides, host of Opening Bell and the Watch List. Nicole, first and foremost, happy Friday. I know it's not our first time speaking today, but first time speaking about these markets. I mean, how do you digest the week that was and sort of assess things as we go into next week?
I think the fact that you have back-to-back weekly good sign. We haven't had that all year long. So we have had, after 5 weeks of selling in a market that's been oversold, people did step in and buy 2 weeks grow. And a lot of this now, at least this week, we saw that complete turnaround yesterday on, the fact that you have the ceasefire and things are going, I guess, as well as could be expected. We know that our delegation is heading to Pakistan, to Islamabad. We have, J.D. Vance, Steve Witkoff, Jared Kushner going to speak with some of the Iranian leaders there. And so with that, to try and have this fire underway. And the Strait of Hormuz, obviously, bone of contention. No, but not really. Any ships are going through there, and Iran wants to charge for that. Also, what happens with Lebanon and Israel? Is Lebanon part of the ceasefire or not? So I think that's another huge conversation that has to happen. In the meantime, we saw some bright spots when it came to tech. For example, Intel has had just an incredible time of it, has been at new highs. You had Amazon put onto the conviction list over at William Blair. You have had some bright spots when it comes to some of these tech names. Also, CoreWeave and Anthropic, a multi-year agreement grabbed Wall Street's attention without a doubt. And that's the big picture. And next week, of course, Goldman Sachs on Monday, JP Morgan, Wells Fargo Citi on Tuesday, Bank of America, Morgan Stanley on Wednesday. So we'll be watching for net interest income, also investment banking and trading revenue, which really a lot of folks think the banks might have a good go of it. We'll have to wait and see.
Yeah, we will have to wait and see and obviously get more clarity on that next week. But to focus on some of the analyst calls today, UBS did downgrade ServiceNow to neutral. Wasn't by any means saying, sell your shares, but we have seen, of course, ServiceNow caught up in some of the recent pullback and everything related to software. And so tell us more about this move.
So here, look, software has been a bone of contention. It hit those private credit markets. Software was hot, then not. And even the very latest about Anthropic and Mythos, Claude Mythos really hit the group again, just when we thought that maybe they were coming around. In the meantime, last night, UBS did do a downgrade here. They put it in neutral from a buy, $100 from 170. They're just not convinced. They're not convinced that ServiceNow, which is a workflow automation company, is best positioned for the AI era relative to the other application software names, and thinks that going forward there might be skinnier than normal beats when it comes to the upcoming quarters. Also, limited upside to the guidance for ServiceNow. So really not very positive overall in the same. Look at the software index, the IGV, down almost 30% year to date. ServiceNow is down 46% year to date. Also, how about CRM? Salesforce is down 37%. So this certainly been hit hard. I will say there was an outperform rating that I did go through that I was looking at. BNP Paribas was more positive on ServiceNow. They actually had an outperform from a neutral, and they thought that the analysis generative AI was a good portion of that, and the $600 million in contract value for the fourth quarter, that was a bright spot for ServiceNow. So maybe you have a little bit of the back and forth when it comes to the analysts. There's no doubt that some of these software stocks are still getting hit pretty hard. Jenny?
And they absolutely are. And today is definitely no exception to that. So appreciate it, Nicole Petalides, for all of that breakdown as, of course, we close out this week of trading. But now it is time to spotlight overall consumer sentiment. And joining us for that is Eddie Yoon, partner of Grayspace and co-founder of Category Pirates. Eddie, always love to chat. And I was looking back over the last month or so, the last time we spoke, and you have shifted from consumers bracing for these higher gas prices, which is still very real, to arguing that they are already spending past their means. And so what has changed as far as the data is concerned just over the past month or so? And right now, have you grown more or less consumed about some of the consumer sentiment?
Yeah, great question. I think the consumers are spending past what they have. I mean, some of the latest, as you said, disposable personal income down in February 1%, while personal consumption expenditures are up 5%. So people are spending. GDP came in last quarter at 0.5% versus 4.4% before, and the Michigan sentiment at 47.6%, down 11%. Like, these are all not good. But the consumer is still spending because I think they're hoping that this Iran war is short-lived and that the strait opens up and gas prices come down. Now, here's the problem, that while consumers are kind of whistling past the graveyard here, smart money is kind of betting that gas prices and one of the interesting notes that I saw was that Costco is launching gas-only stations, which is the first ever time that there's a 40 pump station in Michigan in California. They're planning for a 240 pump station in Honolulu, where I grew up. And this is betting that, you know what, the consumer is going to be looking for a deal, that gas prices are going to be high. They can drive incremental memberships. So when they are investing CapEx that way, that suggests that they also believe gas prices.
Okay, and I will say also in March, you did emphasize the fact that we are seeing, I mean, more of this mindset of like saving and focusing more on your spending intently. But now the read is a bit more inflation. How do we respond quickly to inflation and gas prices and costs that are continuing to squeeze consumer behavior? And so I am curious if you see AI becoming less powerful in offsetting some of the inflationary concerns or just simply overwhelming it right now.
Yeah, it's a question that we're all trying to figure out. I do think that short term, AI is not going to pay off as much as we want. Just gas prices are up from $3 in February a gallon, $4. So AI can't catch up that quickly in a 37. That being said, what consumers are actually doing is they are, I think, budgeting smarter than they ever, thanks to tools like AI and Claude. And so as a result, what they're kind of figuring out is that if my must-have expenses, transportation, housing, because rate cuts are out the door for the year, if those are going to remain high, then I still want to spend on my nice-to-haves, but I'm going to look for something that gives me a little incremental fun and something different than. So that's what you're really seeing is that, in the beverage alcohol category, there's a lot of buzz around people aren't younger and you can see the data. Wine is down 7%, beer is down 4%, beer down 4% as of May 5. However, you do have these new categories like beatbox beverages, which did $340 million at retail last year, 50% year over year. They sold 85% of the Bush for $500 million. And that is the harbinger of things to come, is that consumers aren't going to spend their nice to have dollars, which are shrinking, on things that they've had already. That's kind of all been done, and they don't want something like that. They want something new. And Beatbox is like that. It's a sweet and spicy chiladas. When was the last time you had a beverage like that? It's in a little container that you can drink off premise versus at the bar. You pay a cover charge, and it's around music. And so I think consumers are just choosing different. Anheuser recognized that and bought that trend.
Okay, and I love that you mentioned beatbox. I unfortunately am too well familiar with beatboxes. I think that they are something I've had too many times, and do not make you feel great the next day. I will put it that way. A very sugary beverage, but I think it's really interesting, especially considering we've seen some trends of consolidation in the space, like Brown-Forman looking at potentially, obviously, these various agreements overseas to continue to broaden its international reach. And so from an international stage, does that alcohol scope or like the broader really consumption scope change at all, where we're seeing maybe the U.S. be more focused on like this more sober, curious mindset, whereas it's not really the same internationally?
Yeah, no, I think you nailed it, is that what you're going to see are two different M&A playbooks that go on. One is consolidation play, and actually the Anheuser folks have proven the masters of this, going from when they were Ambev in Brazil and they bought Interbrew to become Bev Belgium, then they bought Anheuser-Busch, now InBev, they bought Modelo, they've just gone on an acquisition spree. And there's not really left anything in your space for them to buy, and therefore they're reliant on new categories. And so the other spirits players will go through the same book of consolidating where they can internationally, but also looking for new categories that have yet to be fully tapped into, because I think they all kind of feel that the old is gone, the new is bet on the future and not bet on the past.
Right. I mean, you cannot just be right now leaning into the strategy that has worked for years. I feel like innovation right now is very important and kind of catering to these ever evolving trends from consumers, which have been really interesting to follow. But so appreciate it, Eddie, you, and always love our discussions, partner of Grayspace and co-founder of Category Pirates. Now, coming up next, the disruptors as we look at Taiwan Semi after reporting record revenue yet again. We'll dive into the numbers coming up next.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to focus on driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for the stock. That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network. It's time now for the Disruptors. George Tillis, senior markets correspondent, is here with today's company, TSMC, posting a record revenue. And I mean, every metric looked pretty strong here, George, driven by this AI chip demand, of course. But I mean, like monthly figures, first quarter scope. I know we'll get more of their financial details next week, but walk us through what really stood out here.
Yeah, I mean, this is interesting. I mean, in the context of what's happened geopolitically, semiconductor demand really hasn't faded at all. And if you look at TSM, which, some would say has about 70% global market share of fabrication across, high performance computing, AI, but also consumer electronics, CPUs, just you name it, they produce it. But they posted for the quarter effectively an increase of around 35% sales year over year, which is actually quite a bit higher than even their trailing 4 quarters, around 31%. But for the month of March, which you would say would have been weak, considering all the geopolitical risk we faced, that was higher by 45%. So it's kind of a remarkable move for TSM in terms of how they're manifesting sales going forward. And overall, the strength of the business is sound across multiple technologies in the semiconductor stack, not just in memory or high performance computing or AI chips. They produce across the globe for various industries, including IoT, automotive markets, industrial markets. Mainstay customers, as we know, NVIDIA, Apple, and we know that there's actually a CPU shortage now, which is, I think, benefiting TSM as well going forward.
Absolutely, and I mean, seeing a pretty decent move today. I know that it's not maybe as huge as what we were looking at least pre-market today, but still up over 2%, and the overall market is unsure of itself right now. And so when we think about trading TSM here, obviously earnings out in about a week or less than a week at this point, which is an exciting catalyst to watch for. But considering that, how do you think through the trading the same for example purposes?
Yeah, look, there's clearly a momentum in the semiconductor name. So my trade here is going into next week with next week expiration is a bull debit spread, because if you look at the chart, there's a gap and potentially a go up to the previous resistance areas of TSM around $390. So I'm basically going to look at buying, like I said, a call debit spread. I'm going to buy for next week's expiration. So you have to keep in mind it's a very narrow time frame. Buy the 375 call. And then I'm going to sell that 390 call against it. So it's a $15 wide spread. Earlier today, you could have bought that for about $5.50 a share or $550 a contract. So it's a bullish continuation with a 1 week period of expiry. If you do place this trade, your max loss is the 550. Your break even is essentially 380 and a half. And your max profit in this trade is 950. And that'll only occur if the stock hits 390 or higher by expiration next week. So you're effectively earning about $2 in return for every dollar of risk in this trade. But again, to achieve that max profit, the stock does have to hit 390 and at the very least, at least 380 and a half to get to break even.
Okay, and a really good summation of everything we should watch for here for TSMC, of course, into earnings, and given the fact that it still saw some record revenue in the last month and the last quarter. Thank you so much, George Tillis, Senior Markets Correspondent for the network. But it's time now for the 360 round. And for that, let's bring in our panel to discuss the upcoming earnings season. Matt Maley, Chief Market Strategist at Miller Tabak Co., and Tom Essay, founder of the Sevens Report. So, Tom, we'll start off with you and appreciate you so much for being here as we do ramp into what is going to be a busy week next week, I'm sure. But bank earnings kick things off. What are you most focused on hearing right now in regards to the health of consumer spend?
Good morning, everyone. Thank you for having me on. Yeah, so we get some.
Hey, guys. Just got off my work meeting. It was a long one. Can't tell by my face. I'm 11:51 Eastern here. I'm going to run up. Looks like we got a great, I just saw the buy pressure move down. Active. Right at that. Had some good questions in the chat. Have any specific videos about this heads up display and indicator specific videos to this. No, I haven't made one yet. But just about all the videos I've got out there include this in it, where I talk about what's happening. All the live streams include this in there. You can go back, and I would recommend just fast forward through it, and you can just watch get an idea. Live streams automatically download and go on the YouTube page. Don't sit there and watch 6 hours of live, but just you can. But I will make a video. I will walk through special math I've to get these levels precise. And I'm gonna go up, have a salad. I'll be back down. Rock and roll. A lot of good discussion here. Thanks. If you're new to this, I'm Jason with Tactical Data Desk LLC. I'm just trying to enable traders and provide you best possible product. No gimmicks, no tricks, no marketing, nothing fancy. Not even nice hair. All right. Happy watching.
Bounce back a little bit. That has an impact on margins. Also, just stocks themselves. Kind of strange. Bank stock poorly after they report earnings, even when they report good. Kind of a strange thing. And having bounced a lot on the ABE, REFs, could see it almost no matter how they report. After the
Yeah, and I think that is absolutely correct. And markets also appreciating the caution here. And so, Tom, when it comes to then looking at tech, because how could we not discuss tech? I mean, how important are hyperscaler earnings specifically in restoring some confidence around this AI trade?
I think it's critically important. April 29th, big earnings. Like it's a long way off. It'll quickly. We get Microsoft, we get Google on April 29th. So that is going to be a key AI trade. Again, everybody's been so focused more that we have almost sort of forgot society, which, by the way, was one of the biggest negatives on the market before the US-Iran. And that hasn't got much better either. You're tracking software. That's sort of to us at the heart of sort of this concern that it could be the sort of more destructive for earnings wholesale thought previously. I believe IGV hit a low. And so that tells me that this hasn't gone away. So what we really want to hear from is, look, they're going to be AI cheerleaders. Everyone's an AI. And they're very consistent about that. My question is this. Are they going to deliver a compelling case that tells the rest of us, this community, that all of this spend is going to start to produce a positive ROI? We have to get rid of some of these overcapacity concerns, and they can help do that with the quarter earnings.
Yeah, and I think such a good point calling out IGV as well. I was just actually checking. We hit a new low today, even following yesterday's new low. So a great call out there is that weakness just around about 2%. But Matt, you did flag TSMC's earnings as critical for tech sentiment. And I would say also some of their numbers that we already got were hugely optimistic. So how do you think through these tech stocks, and also the Mag 7 naturally, given expectations are fairly high, but at least we've, I think, pared back some of the sky high, momentous, really expectations that were going into this year. Things are looking a bit different positioned as it stands right now.
Hey, Jenny, it's funny how Tom and I are page comes to war, the war started. Concerns about AI and the profitability broaden out. Talked about with credit markets, private credit area. But TSMC is going to be very important. Now, one thing is that they just raised expectations, and as you had with your question on those earnings, they're going to. I just again, stocks starting to get elevated. You see the SMH, the semiconductor, hitting a new all-time positive, but a lot's going to do more. That's what we're talking. What Tom was saying, that we need to see. Great that people are spending a lot of money, but something, their costs are very high as well. And we don't have a situation where costs are going to up with the newest chips. You can't just say, okay, we'll use internet stuff. They're going to have to upgrade their even if they have, even if their chips are fine, they got to upgrade every year. So those kind of margins, ROI, the time we keep it. If we don't get
I could not agree more and appreciate you both for all that insight. Matt Maley, Chief Market Strategist, and Tom Essay, founder of the Sevens Report. Now, that'll do it for us for 360 today. Have a wonderful weekend. Fast Market is up next.
Schwab Bank Investor checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebate, cash withdrawals worldwide, no overdraft fee, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to Schwab One brokerage account, you can manage your checking in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Schwab coach concepts brought to life.
Schwab coaching is constantly.
It's relatable, practical,
clear, understandable,
and hopefully
take it for what it's worth, but class.
Schwab coaching, actionable, individualized, growth, empowering.
It's really human for investing.
We have coaches who have been in the industry, around the industry, a long time.
So the nice thing about
We want to engage with you in chat on shows we host. We want to engage with you outside of the
LC. We have different formats because people learn differently at times.
Somebody's a real bookworm, we've got courses for you to learn from. Go at their own pace.
Have webcasts running through all day, every trading.
We've got this ongoing 24 times a year events. They're making their way around the country.
So you get that opportunity to share experience, knowledge with other traders.
They're kind of helping each learn along education.
Going to be able to help, regardless of where you are on that path.
It's really not just that it exists, but that you can tap into 30 some hours, but each and every. How incredible is that? And it's free.
Stay connected to what moves markets. Download the Schwab Network app and get live
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. It's noon Eastern here at the New York Stock Exchange. Choppy trading so far today as investors hold off on any big moves ahead of high-stakes talks between the U.S. and Iran this weekend. Let's get right into a check of your scorecard as we hit the lunch hour on Wall Street. We've got the S&P 500 pulling back a bit, off by about 0.1% there in terms of some of the weakness. We're watching weakness in financials and consumer staples. On the plus side, you've got gains in information technology and utilities. Over in the blue chip sector, the Dow's lower by 0.5%. NASDAQ 100 has its head just above water. Russell 2000 taking a little bit of a step back, off by about 1/3%. Here's the roadmap for today's show. We'll look at example option strategies for ServiceNow. It's sliding once again today. Plus, the team from Likefolio will be along with new sentiment data on Disney. And Goldman is also on our radar today ahead of its earnings come on Monday for banks. Now that we've got the roadmap for today's trading action, it's time to bring in my co-hosts. You've got both Tom White and Alex Coffey in our Chicago studios. Double trouble for you or double treat. All right, guys, let's get into it. We've got Wall Street just, kind of choppy, right? We're higher, lower. Investors keeping one eye on the headlines and what will the talks look like between the U.S. and Iran. Tom, what's your take when you look broad strokes across the market today?
Yeah, maybe a little bit of a break here in positive action that past couple of sessions and this week in general. I mean, the S&P 500 is up 3.5%, the Nasdaq's up over 4% so far this week. So not surprising, a little bit of balance in the equity market. The Dow popped in positive here before slipping here today about 0.5%. But I think if you take a look at it, crude oil starting to gyrate a little below $100 a barrel. Everybody's talking about the ceasefire. Yeah, that's been equities point, but the thorn in the side is get more on these talks and maybe a potential resolution. Market might still be choppy here. Point you look at oil, the Strait not open, Diane. That's one of the talking points that take place starting tomorrow in Pakistan. So yeah, I think everything's kind of hinging on what comes out over the weekend from those talks. If resolution, then also maybe taking a little bit of a break after the nice bounce back rally that we've seen in equities so far this week.
Alex, so first of all, thank you so much for stepping in today. We appreciate it. It's the Alex Coffey Show today. But take us to school. What's your point of view?
Yeah, I guess, Diane, when I look at things here, I have to look at it in the context of the last couple of weeks. And the last couple of weeks, you had, I think, some of the hedging that took place, you've seen some of that lifted. And a lot of that was due to the market starting to show signs of optimism even before the ceasefire was announced. Kind of nitrous, was hit into that ceasefire announcement. You have a market that's now closer to unchanged than it has been for quite some time on the year, recovering a lot in a short amount of time. But you've seen volatility come down. You have a big high stakes meeting. You have some shows of force out of Washington. But all in all, 30% of the names are higher in both the NASDAQ 100 and the SPX today, yet you basically have an unchanged market across the board, which goes to show that some of those market leaders, the NVIDIAs of the world, are doing some heavy lifting. But I don't think we should be surprised if there's a little bit of weakness into the close today, Diane, and perhaps a little bit of a spike in implied volatility, just as some of those hedges are perhaps put back into place just to cover bases with the high stakes meeting over the weekend.
Okay, let's dive deeper into the economic data today. Alex, you and I went through the CPI earlier, came in line with expectations. But the mood of consumers, that tanked. This surprised me about how bad. It's the lowest on record. Now, listen, Joanne Chu of the University of Michigan's Consumer Sentiment Survey does expect to see an uptick in mood. If, again, depending on where things stand with this ceasefire, right? Because they said this survey was done before the ceasefire. Tom, what's your take?
Well, I think, as far as consumer sentiment data, that's been waning a little bit. Not surprising that we're on record have back as far as headline level. But remember, you know what? I'll sometimes I'll take sentiment, kind of throw it out the window. I think it's biased, small, allotment that they, and it goes along political lines. So I'm going to throw that one out. And kind of ignore it because it's not surprising that sentiment goes down when, a war is going on. Crude oil is near $100 a barrel. Oil prices are rising and prices. But if you take a look at the CPI data, coming in over year on the headline numbers, not surprising, bump up in there. But then core, at 0.2% month on 2% over year. And there was actually some pullbacks in medical costs, cars. So there were some bright spots on that side of it, and that sent stocks a little higher. I think when you look at it, as far as the data goes, you're going to have to look at the CPI number moving forward because, you know, of course, a headline was, you know, fuel based, right? Oil prices are. That will kind of equate more in April because about 40 gains that we prices recently aren't fully built into the. So not surprising on that, but actually, I think the market was that it wasn't even higher than the numbers showed.
Market's paying more attention to that with CPI. But the thing that's interesting about sentiment this time was there's a downtrend no matter what side of the political aisle and across demographics as well, whether we're talking about age or income level. Alex, your thoughts on now that you've had time to kind of process CPI or the sentiment data?
Yeah, in the case of CPI, I think that the core still shows a decent trajectory for inflation. I'm not in the camp that the Fed needs to be raising rates and inflation is the primary concern. So maybe I'm going to see what I want to see in some of that data. I tend to think that energy has more longer-term deflationary effects than inflationary. There's a reason it's stripped out of core. There's a reason why the Fed doesn't focus a ton on those prices, and even why their own words even recently suggested more concerns around tariffs than it did around the oil spike. As far as sentiment goes, I acknowledge methodology concerns and this particular survey. But if you're comparing like survey to like survey, you can still garner trend information. And so the fact that you did see a plunge in sentiment, I think, is notable. Now, the headlines are going to scream record low. Just objectively, I mean, it's hard to say that right now is worse than at other times for consumers, like, I don't know, the great financial crisis, the peak uncertainty of COVID, etc. But it does, I think, also highlight, Diane, that whether or not we like it or not, if you're fortunate enough to be employed at this time and you're participating in the upper part of that K of the economy, it doesn't feel nearly the same as it does for those who are struggling to find their way into the employment, cycle at the moment. And so it's not lost on me that there's a big swath of the U.S. population that's struggling, and I think that's why you've seen such consistently negative consumer sentiment data for the better part of the last several years.
I always love your insight on that perspective, you know, because you kind of give just the human side of the job market when you ask the existential questions about who's going to work or where will income come from if AI takes over everything, right? And, you know, great perspective about where the pain may be felt and why consumers may feel a certain way. And I wonder, though, if there's also some bias in terms of how the survey is taken, because you're right, you know, times were certainly worse during COVID-19, during the pandemic rather, and during the GFC. But let's talk the state of the SaaS apocalypse. We've got more pain in the software sector. Salesforce, Palo Alto, CrowdStrike, name it, they're under pressure. Tom, your thoughts?
Yeah, these are falling knives right now. It seems like they can't catch a bid. And this comes on the back of that release from Anthropic on the Mythos model, demonstrating that significant software and then you throw on top of it, you know, their launch of witness. Look at the move. Salesforce.com, Palantir getting hammered so far this week, down double digit, like others in base. And I think the market is starting to trying to figure this out, right? They'll sell, ask questions later on this. We've already had one apocalypse. We recovered a little that. This is the second wave of it. But I think that's what investors of right now. And they'll ask questions later. Will this rip some at you know, all been good, right? You know, talk about that and throwing at more than they you know, gave pretty good guidance at the last earnings event, but that's not what the market looking at. They're looking out 6 months, a year, happen to where maybe you're not going to need that big subscription or that $1 subscription as a business on service or sales.com agent taking a lot of the workload that they provide, maybe at a cheap level at this. So yeah, it's a scary time in this sector right now, and it just doesn't like the bottoms in, at this at some point you would community out and start trying to back these stocks up right now. Not at this point, and I think this is going to have to play out. What type of impact AI is going to have on their growth, their businesses, in and the longer term.
Yeah, Alex, I think it's our buddy Coop who dubbed this the Sassacre. Your thoughts when you look across the software space?
Yeah, I think from a portfolio construction standpoint, if you think about the role that companies like Adobe and Salesforce as sort of, I guess, representatives of this SaaS space over the years, what they provided was consistency and not only growth, but also in sort of cash flows. As they shifted to a subscription-based model, it allowed for confidence in investors in what they were actually buying into. As you look at what AI has done to this space, it's not unique to software by any stretch, but I think it's had the biggest impact to software right away. It's changed everything very quickly to an adapt or die kind of a situation. And it took something that had like a very narrow set of outcomes. Like, yeah, maybe they'll miss on their earnings metrics. They didn't grow or get as many new contracts as you thought, but it's still really consistent and it has those existing contracts. To one where it's like, maybe it continues down that path, or maybe it's just completely just gone from the need, because you can use these AI models and construct something in-house to meet that same need. Now, we're not there yet, but you can see how quickly this technology is evolving. And if you're a portfolio manager and you have to face this question, does this still fit in my portfolio? Well, it's a totally different type of stock now in the case of many of these software names, especially the more niche ones, because if they're disrupted, they got nowhere to hide.
Right. And who knows if cybersecurity will, not if, how they'll come out of this. Let's talk about CoreWeave. This is a very different story here. You guys, shares swinging higher. Another day, another deal for CoreWeave. Those shares are off to the races. I think they're even higher than when we talked earlier in terms of the market reaction, Tom, but your take now.
Yeah, up about 13% in today's session, and that comes on the back of that move after the from Meta Platforms dollar that came yesterday. And if you take a look at it, Anthropic with partnership, over the next few years, cloud service run those workloads at production scale, and said that focus on the phase rollout, but they didn't give any details about the investment cost or anything like that. $5 billion in notes that CoreWeave had to issue, invest in the build out. I think one of the key this is the partnership with Anthropic maybe giving a bigger lift, because it seems like everybody, this is the OpenAI partnership were announced in 5 that gave lift to a lot of stocks that have since back, is want to be involved with Anthropic at this point. So yeah, just continuation of this spinning cycle of investment between all these tech companies, AI infrastructure. But yeah, it's been a bonus because Core had been lagging prior to the years, just due to the level of debt that they're taking on to build this out. But roll sent a lot of these tech companies, that's definitely going to be a bonus.
Yeah, one of the worries before obviously had been like, okay, who else besides Microsoft? Alex, your thoughts on CoreWeave?
Yeah, well, everything I just said about software as a service being disrupted, if you're kind of following my thought process here, saying, hey, if I'm a portfolio manager, I don't trust that space anymore, and I'm rotating out of it, and maybe I have rotated out of it, that money needs to find a home. Well, what kind of seems like the new stable subscription-based model is this AI infrastructure as a service model, the CoreWeave type name. So I'm not saying they're a good investment or if they're worth the valuations that they have, but if you're looking for consistent deal kind of cash flow, it seems like this is where the market's looking.
Right, great way to put a pin on that. We've got bull versus bear coming up. The guys will get their example trades put together for service now. Just talk about the SaaS apocalypse getting slammed once again. Mid the sell-off in the software space. We've also got some analyst activity around, and we'll have more fast market after this.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching. Start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Service now getting served with some bear claws today. The stock getting sliced after UPS downgraded it to new from a buy. It's got a $100 price target now. That's down from 170. What previous view from UBS is that AI may be a bigger threat to ServiceNow. UBS said that while ServiceNow was once seen as well positioned for the artificial intelligence era, that view is under pressure as enterprise customers budgets away from software. Keep in mind, shares ServiceNow down more than 40%. This as the broader software space gets hit. So many analysts are bullish on ServiceNow, making UBS a notable outlier. All right, time now for the tug of war on ServiceNow. For that, let's welcome back in our co-host Tom White and Alex Coffey. It's bull versus bear time. So before we get to your example trade, we got to get your thoughts on ServiceNow. I'm sure Bill McDermott, the CEO, doesn't want to hear all of this kind of bearish sentiment that's happening around ServiceNow. But Alex, I'll start with you. Your take.
Yeah, for me, it's there's not a lot going on that's super positive right now for this space. You got sector, certainly got technical. The stock seeming like it fell through a trap door, Diane, and also still continuing, if anything, accelerating concerns around AI disruption. So I think the case, we already made the case for if I'm taking the bear side here, for example, in the first segment. So I'm just interested in what Tom's going to say to ease my concerns.
Oh, Tom, I'm curious to know your take.
Recently, the fact that, hey, are these all these companies are buying from service? Are they going to go away? Is it going to be a cheaper alternative for these companies, their tools through agents as opposed to using ServiceNow and having that big subscription? Last quarter, subscription revenue grew year over year. Revenue grew 5%. And Bill McDermott, the CEO, he's always so upbeat. Calls that doesn't matter. Now, if you look at it, they provide those software tools for managing workflows, right? Since much of those involve simple tasks, it makes sense that people are thinking that these agents are the ones that can take over those responsibilities. So I think that's what's really putting the hurt on the stock. And as these AI models, the Anthropics, ChatGPT, Geminis continue to learn from themselves, right? That's going to probably get right into parts of the business that ServiceNow relies on. That's those longer term subscriptions they have with major tech companies across the globe.
Well, Bill McDermott characterized himself as a relentless optimist. So, listen, we'll see if that optimism helps things. Let's get into the example trades. We'll start out with yours, Alex.
Yeah, so it's hard to disregard the fact that this stock's on multi lows, that it's basically lost 2/3 of its value from the highs. So looking at a bearish example, but acknowledging the fact that at any moment you could see some sort of a bounce and then a resumption of the trend. So you got earnings coming up soon, trying to stay ahead of those things. Short-term trade just end of next, and it's structured in a way that if this stock really kind of slips a free fall type of a trap door, it can benefit greatly, but it controls risk in case that doesn't happen. There's still a fair chance that at some point the stock finds a bottom. This is really a momentum type of a trade, and this trend and have a disappointment on the macro front that also catalyst. So it's really a short-term trend-based, momentum-based example trade structured in a way, Diane, as you can see, next trade there, April 17th. It's the 80-75 debit spread, structured in a way where you risk 1, chance to make 4. The first thing that should come to the mind of a viewer is probably not the highest probability of success. Right now, this stock trade just to break by the end of the week. The stock will have to fall basically 5%. So you're going to need a tremendous week amount of time. But if you get it, not unreasonable given its trajectory, there's a chance for this to make $400 on just $100 in risk.
Yep, and I'll go ahead and take it over here, Alex. So it's directional. It's a long trade. Alex went out to the April 17th monthly option, so expires next Friday. Buying that 80 put, it's out of the money to the downside, as Alex mentioned. You need to move to the downside for this to play out. Now, buying the 80 put, selling the 75 put. $5 wide bearish put vertical. You're paying, we've got a $1.25 debit on there. It's trading between maybe $1 and $1.10 right now, so you can get it a little bit cheaper. But if you pay that $1.25 debit, that's going to be risk. $125 per spread. If you pay $1, $100 per spread, that can expand. Look at the risk reward profile that we've got up here. If you pay that $1.25, break even 78.75 to the downside. So anything below about 79 is going to be profitability on this directionally biased trade. Key is it's not a high probability trade, right? Because as Alex mentioned, you need about a 5% pullback, get below that break even, just below 79 bucks on the trade. I think one of the keys for Alex on this trade, Alex, is the fact that, hey, I've got 7 days in this trade, but if I get a move and the stock goes down to 78, 77, $70, you can actually maybe manage this or close a portion or all of it ahead of time. So that flexibility as far as trade management goes on a directionally biased trade like this might actually help out if you don't get the move maybe below the 75 level that you're looking for max profitability on this type of trade. But as Alex mentioned, that move downside to get below that break even, just below 79 bucks here on that one. Short term positioning there, Alex, I looked at something a little bit different and a little bit more duration. And I went out to the April 24th weekly options on this example trade. Now, you mentioned they reported second. That could be a catalyst to the upside. And you mentioned if it goes in, well, Alex, it's at 3 and in free fall the last maybe 8 or 9 months or so on this one. So if you think maybe there's a rebound, this strategy may take advantage of that. Went out to the 14 days to expiration on this example trade, where I'm going to buy an unbalanced call butterfly and buy one of the 80 strike calls and sell 2 of the 90 strike calls and buy one of the 92 strike calls. In essence, buying bullish $10 wide call vertical, offsetting cost by $2 wide call vertical. You're paying roughly about a 380 debit on this. Might be about a dime higher than that, but the debit you pay is going to be this. So $3 per spread on this one takes your break even on at that 380 strike that you bought downside part of this butterfly, 83.80 to the upside on this one. So on a percentage basis, to get above that, you got less than $1 to get above the break. Now, we all know on these butterflies when we talk about them, they don't start expanding until those last few iterations. You got to consider that also. You'll have that event risk trade also because for weekly options. But Alex, when you look at this, yeah, you don't need that big of a move to get above the break even. But at the same time, even if this stock explodes back above 90 bucks a share, it's still going to be more than double in profitability.
Yeah, and I'm a big believer that with trading options strategy, particularly risk-defying spreads, you're controlling risk at order. Structured a trade in a stock that objectively trying to say, hey, it's been 3 years of straight down. Today is finally the day it's going to make the turn. Which maybe you have that wisdom, but it can be difficult, and so it gives that staying power even if it does hit the trap door and maybe the bearish trade works out better, that you don't have to make a rash emotion. And the worst that can happen is that debit spent. And so maybe it'll work, maybe it won't. The worst case scenario before you hit send.
Yeah, I wanted to kind of set this up because that short strike on the 90 level where you're short two options, that's where you want it to go, right? That's max profitability on this type of trade. And you look at what the option market's pricing into that April 4th week option series right now, about plus or minus $12 move each way. So it aligns with that, almost with that that level. The platform to kind of give you a gauge of where you think it may go into the expert of April 20. You got to take that into consideration. But two different ways to look at the bull bear debate here. And now, one, you need a bigger move to the downside on Alex's, Diane, and mine just a little bit on the percent gain to get above that break.
Like it. It's a true bull v bear debate there. All right. Thanks, guys. Our thanks again to Alex Coffey for stepping in for Kevin Hinks today. You can catch Alex in about a half an hour from now on his show Next Gen. We've got cash tags coming up. Team from Folio will be along with the latest data on Disney. Begs the question, is there still magic in this house? Stay right here on Schwab Network. Fast Market will be after this.
Hi, I'm Alex.
And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Bartis, live from the New York Stock Exchange. When the market air on it, getting the reaction and real time. Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade. More specialized. Connect with the Schwab Trade Desk. Our team of passionate traders ready to tackle questions. Outcome. Plus, get 24/7 live help. Access support by phone, email, and in-platform.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching. Start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment. For that, we want to bring in our next guest, and that is Landon Swan, co-founder of Folio. Taking a look at Disney today. All right, Landon, I'm going to get right into it with kind of a pun. There's still magic in the mouse house.
I love it. Yeah, I think so. Just short answer, but Disney it's an incredible company because they've got so many different angles, and I think that the two biggest ones are streaming and parks experiences. And so we're kind of have to talk about both of those separately. First, we'll talk about streaming, and they're doing very well here. They're bundling up their services, creating a very high retention service. They've got ESPN, which the workhorse of the group, and Disney Plus has just hit 170 million subscribers. The visits to that are up about 19% on a year-over-year basis. They're leading. A lot of the others are sort of falling off a little bit, but some of that is due to bundling, of course. One of their focuses now is kind of interesting if you think about what Netflix went through a few years ago. One of the focuses for Disney is the crackdown on password sharing. They're trying to boost revenue by getting you off your brother's account or whatever it may be. But you can kind of see here that Disney Plus is doing well. ESPN and Hulu falling off a little bit, but again, there is that bundling effect. So overall, we've got a slight increase on a year-over-year basis for the streaming together. But with when you look at what they're doing with their tiered pricing, they've got the completely free, they've got the paid but supported by ads, and then they've got no ads. And what they found is they're working up that ladder, right? Start them off at free, get them in paying a little more to have less ads, and then get them paying a little bit more to have no ads. And so we're seeing a good revenue mix coming in from them, and good stats overall on subscriber numbers, good stats on consumer purchase intent, consumer happiness. The parks is interesting. If we'll switch over to that, the parks is interesting because it's always been a very steady cash machine for them. We're starting to see just a little bit of concern in the data when it comes to consumer happiness, but this could be an impact of, again, that K-shaped economy, which I talk about every day. But their pricing, definitely the number one complaint that we're seeing. There's a lot of ways to spend money at Disney. It's not just the tickets once you're in. There's the fast lanes, there's the experiences, there's food, there's hotels. And so, it's not just the ticket prices, but people do complain about the ticket prices as well. So there's kind of, again, some people are just like, whatever it costs, we're going, I don't care. And other people are like, whoa, we were going to go for 3 days. We're just going to go for 2. We're going to skip. And the other thing that we're seeing is a lot of competition on those parks. The Universal Epic, the new park that just opened up, I think a year or so ago, definitely getting very high marks from consumers. Our consumer happiness numbers are extremely high on that. And we're even seeing a lot of sentiment around people saying, I'm not going to Disney again. I can't wait to go to Epic instead. And even though it's been open for over a year now, it's still like high rates of sellout. People talking, well, we're not going to go this week because it's full, but we're going to go eventually. We're waiting to see a dip in attendance, and those dips don't ever seem to come. Disney feeling that pressure. They're investing a lot. I think they're putting $60 million to compete in some of the California experiences. I think it's called Land of the Villains and another Avatar, and they're putting some money into Animal Kingdom in Orlando. So they've definitely got to do some CapEx to keep up with what Universal's throwing at them. And again, it's a bit of a crack in the data because it's consumer happiness. Question is, are the K-shaped economy just going to say, well, yeah, some may not go, but there's going to be plenty that have the money and that aren't worried about it. They're going to pay up, and so we'll have to see. So far, they reported numbers of about a +1% in attendance and a +4% in dollars per customer. So they're getting more money out of each person. They're getting slightly more people, but there's definitely some concerns on the happiness number. Here you can see the overall web visits across all of their platforms. Normally we look for big divergence. We like Folio Edge. I hate to break it to you, we don't have a huge edge on this one today. We're more neutral, probably slightly bullish, but really more the bullishness would come from streaming over parks, which we're a little bit more bearish on.
Landon, you mentioned that more money spent. I think you said it was up 4. That's not surprising. Average daily rate for a family of 4 to go to Disney World in Florida is over $1,000. That's ludicrous, Landon. I think we all know that. But as you mentioned, they've got different silos of revenue generation. But it always seems like, Landon, one of those revenue generators is doing well, and it usually drags the stock back down, even though it's a good report like we've had past couple. You mentioned streaming starting to improve a little bit. In this type of environment where inflation's starting to run hot again, K-shaped economy is holding up pretty well, but for how long? Now you throw into the mix that oil prices are $100 a barrel, maybe overseas, vacation won't be coming to the world because it's too expensive. Are you seeing any data along those lines that, hey, we're starting to see cracks in the top end of that K-shaped economy where, hey, I can go to Disney. Yeah, everybody wants to go to Disney, but man, it's just getting out of reach for a lot of people.
It is. I mean, the complaints that we see, it's interesting. There's a lot of complaints of what we paid. Not, we didn't go because it looked too expensive. It was, I can't believe we paid that much. So they still went, right? So that's kind of the interesting thing. And like you said, go for 2, 3, 4 days, you're spending $4,000 as a family of 4. And I'll tell you, the universal prices are no different. I mean, they're extremely expensive as well. It's all about novelty and who's got the latest and greatest ride, or who's got the coolest IP, whatever it may be, like the attractions themselves. And so I think that's where Disney is starting to feel a little bit of pressure. I mean, from Six Flags and SeaWorld, they're smaller competitors, but them and Universal are definitely throwing a lot of money into parks, new rides. And it can't just, it can't just be the same old at Disney. So the mouse ears can only carry them so far, so they got to spend a lot. But yeah, I mean, what we're seeing as far as the parks and experiences go is very much either people are either price insensitive, they don't care, they want to do what they want to do, and they've got enough money, or they're starting to feel it a little bit. But just based on what capacity issues that Disney has and just the number of people they can get in, my gut tells me they've got limited enough capacity that they can fill it up with people that have plenty of money and aren't too worried about it. And I think that's kind of what they're saying to the market with continual price raises. I mean, I know it's not just greed. They've got inflation, they got labor, they got energy costs to deal with. But I think that they're continuing to basically act. But eventually that may crack. I'm not sure, but that's the number one complaint that we see as far as happiness. That's the only drag that we see on Disney right now is the happiness. But on the streaming side, everybody seems to love it. I mean, that Avatar, Fire and Ash was a hit. It drove a lot of subscriptions, streaming side of things. Their streaming profits up 70% on a year-over-year basis. So streaming is doing extremely well. The parks are doing well, but there is concern with the pricing there.
Okay, so I did want to ask you actually about streaming. What is Disney doing right? Because when I look at your the one graph where you ground young people like you, so I'm curious to know what Disney over you.
Yeah, so what we're seeing is that they took a lot of their properties, if you will, or their brands, and they're bundling them up, and that is creating this mentality of lack of churn. So if you have Disney Plus, Hulu, HBO Max, anything in those bundles, say, well, we don't watch this one much, but I don't want to lose that one, so let's just keep the bundle. And so I think it's the diversity of offering, the fact that they're all together, that's really helping them with the churn. Now, keep in mind on that YouTube TV, that is a year-over-year number. Those are very strong numbers from a year ago. So basically, -1's basically flat. So they're not, losing too much ground. But I think that's what did really well. Again, is the bundle is cutting down on churn. Plus, they've got this smart strategy of taking people from free to paid with ads to paid with no ads. They're doing a good job there, but I think the bundle is cutting down on the churn. That's the main thing that's winning for them right now.
And appreciate that. That is Landon Swan, co-founder of Likefolio, with the latest sentiment data on Disney. Now, for the trading perspective of all things at Disney, Tom, we got a lot of insights from Likefolio. Your thoughts before your example trade?
Yeah, the recent announcement, they're going to cut up to maybe 1,000 positions. So maybe cost effectiveness, financial might help this stock. But it's going off of Landon's data. They were relatively on this stock. And I think that's been the problem. If you look at a 1-2 year chart in Disney, it's been choppy. It's been ups and downs. So it comes into play where they have a good earnings event, but maybe one or two of their segments, whether it's the parks, whether it's movies, whether it's, again, they might drag on the overall earnings of this company. They've got the new CEO, Josh D'Amaro, that came in. He came from parks. So we'll see how he does move forward. But I think inflationary pressures are going to be a concern, probably for guidance more than anything, when they report in a few weeks here. So, Diane, I looked at a strategy that kind of sets up with what Likefolio said. It's a neutral to slightly bullish strategy. It's a covered call. The stock pays right now a dividend yield of 1.52%. If they continue to pay that, create some yield if you want to own the shares and this type of strategy. So for every 100 shares of stock that you buy, is selling out of the money call to the upside on this one. I went out to the May 1st weekly options to sell an upside call because they report earnings on the 6th. So I want to avoid that earnings event, but maybe take advantage of consolidation, maybe even a grind higher into that report. But for every 100 shares of stock you buy, you sell one of the May 1st weekly options, the 102 strike calls. That's currently $3 out of the money to the upside. You're going to pay, we've got a debit up on this risk profile of 98 bucks. It's probably about 30 cents cheaper than that right now because the stock has pulled back as the markets come in a little bit. But the debit you pay is going to be your break even to the downside. So if you pay $98 debit, you're buying the shares at a discount to where they're currently trading, and that's your break even to the downside on this one. Now, your risk, you got a lot of risk, right? Because it's capital intensive. You're buying the shares within the strategy. $9,800 of risk if the stock were to somehow go to zero. So keep that in mind. So on this strategy, it's a yield builder, right? If they keep paying that dividend, you could collect the 1.52% dividend yield. And you have that yield from the out of the money call that you sell. Now, it caps out gains upside. You have some assignment risk if it goes above the 102 strike, those calls. But as you get closer to expiration over the next 3 weeks, you'll have that potential to roll that short option on a week-to-week or month-to-month basis. That collects credits, right? Those credits add up to potential profitability and lowers that break even by the credit you collect on this. So it's a longer duration type of strategy where it's a neutral strategy. So if the stock doesn't do anything, you're still collecting yield on your long stock position here in Disney. And Diane, it sets up with Likefolio's data. And I went to Disney World one time, real quick here, Diane. I went to one time with my kid. On the way back, I said, "What part of Disney World?" Mentioned the Benihana at our hotel. So I told myself, we're never going back there.
Yeah, listen, I went to Disney World one time as well. I took my son. It was overwhelming. So, I mean, yeah, once was enough for me. All right, I guess it was enough for both of us,
Yes.
right? We have got the breakdown coming up, Tom. We're taking a look at Goldman ahead of its earnings. Those are due on Monday. We'll have more fast market after this.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast right for you. Platforms webcasts are designed to broaden your knowledge. Platform available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platform. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live watch on demand. Head over to schwab.com/coaching. Start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall, live on the floor of the big board. Before we get to the breakdown, let me give you a check of where markets stand as we get closer to the bottom of the lunch hour on Wall Street. The S&P 500 off by just shy of 0.2%. Dow a little soft as well, off by a little bit more than 0.5%. Nasdaq 100 flipped just below unchanged at this point. It was a little higher, now a little lower. Russell 2000 lower by just shy of 0.5%. Earnings season kicks into high gear next week, and the banks take center stage. Kicking off the week is powerhouse bank Goldman Sachs on Monday. The street is expecting GS to log earnings of $16.34 per share, which would be an increase from the prior quarter. It comes at a time when banks are having their worst performance to kick off the year since the regional banking crisis a few years ago. Now, shares of GS have recovered some lost ground over the past week as tensions in the Middle East. Time now for the breakdown. For that, let's welcome in George Sillis, senior markets correspondent, taking a look at Goldman ahead of its quarterly report card, which it releases on Monday. So expectations maybe high for this one. How are you looking at expectations for George?
Well, I mean, first off, if you look at, for instance, the broader XLF, the sector X buying that performance on a basis. I think that moral story for Goldman is it's a very nimble outfit, not necessarily tied to lending, credit allocations, but relative to investment banking advisory backlog as well as fixed currency trading. With back in 2025, return on equity, key ingredient to, I think, the margin expansion as well as the progression of the price of the stock going forward. Match at the very least, perhaps beat 15 to 16% return on equity the company published. I think if you look at some of the standout areas, business, the growthier areas, not the largest, but investment banking, expectations around 2.4 billion. That number is expected to be higher by 26% year over year. Equity, essentially advisory fee, 19% higher year over year, and fixed income and commodity and currency trading, 14%. Now, one of the more stable areas now and more durable is asset management and wealth management. That number is expected to be least growth area of the business at around 10.6% at $4 billion. So pretty balanced revenue growth amongst their four major divisions. But keep in mind, investment banking going forward is the growthier area business. That also might create some higher return on equity during demand for investment banking and underwriting we're seeing going forward based on some exceptional IPOs coming to the market, including companies like SpaceX.
Yeah, that's one of the things that was the expectation was we would see increase in activity in the IPO market this year, and that would bode well for Goldman. There are some concerns about that now because of the war with Iran, which I know we're in a truce period. Quick final thought, George, on expectations for Goldman, especially like the analyst view. They're largely in the whole cap on it right now.
Right, and I think that the reason being is that there are perhaps price relative valuation across the board for all the other financials. But nonetheless, and for business right now in terms of advisory and equity trading business, that has done exceptionally well. So they can maintain those levels they had on a trailing basis, equity trading, fixed income and commodity currencies trading, but they also, again, improve their investment banking revenues as a holistic total of the corporate revenues. That actually might be a catalyst. Yes, that the metric that analysts will be on is return on equity, because that's the key ingredient to generate the curing effect of margin expansion for the entire business.
Return on equity and maybe also some uptick in IB. Right. Thank you, George. That's George Sillis, our senior markets correspondent, with the breakdown on gold.
Hey guys, this is Jason. Just got back from lunch. Probably the best salad I had both my kids when we were all eating. Screen went off. But typically a Ninja Trader, if you just click this F up here, the screen will go with it. But if you resize it all, see how there's no F up there at the top of the screen right now? But if you resize it all, watch, as soon as I push the left mouse button and hold and drag the prices, watch that F reappear. Yeah, the F showed up. That undoes that. I wanted to just hit that F and let this go. So now the screen would stay like this throughout the day. Then you can't see all the wall, or that it went off while I was eating. And now the best part of the day, get to do this and watch. This is the best part of the day. Second best, third best part of the day. Third best part of the day. My afternoon cup of coffee. There's nothing like it in the world. Well, look, we had price hit this positive call wall at 68. I'm sorry, yeah, 68. I don't know what that is, 46, something like that. And then come right up. And the split wall acted as support how many times? 1, 2, 3. And then came below it, at it, support, now coming above it. And now here's your next resistance line. Positive GEX, but the shift now is negative 17 million. Let's bring up the other dashboard. See what's with the shifts. Oh wow. Look what happened when I was up there eating. The move myself out of the way for a second. The intraday shift did go negative while we peaked at about 1125 and then real steep on the way down. And then went negative real quick at around 12, was that 1242, 1244, then positive again. And that absolutely corresponds to price. See if we can get them both in there. So here's 11. Shrink that. So here's the shift, and the price matches pretty well. Ooh, we got a little bit of negative gamma right there at 68.15 SPX price. A pretty interesting trading day. That's how we're looking. Look at the delta speedometer. Was at negative 38. Well, what do you guys think? Would you what do you want me to, what would you like me to add to this? Would you like to see the cumulative volume delta by the 1, 5, and 15 minute down there? I think that would probably help the speedometer be more effective knowing what that is. Yeah, interesting positive GEX wall there at 68.48, and price touched that and then went up about 10 points right from it. And that's power of gamma exposure here on the ES futures chart. ES futures chart on NinjaTrader through the heads-up display. This is proprietary algorithm, Python feed, and indicator that I wrote specifically for NinjaTrader 8 that I love to give back free to the trading community in this live stream here. So join me daily if you like seeing this kind of stuff. And if you make any trades from this, post those in the chat and we can give you a round of applause. Awesome.
I mean, I $100.
Hey, Ron, that's a good question to go from wall to wall. So, yes, however, realize that not all walls are created equally. So, for example, hopefully you can see this wall here on ES, and remember this is the ES adjusted price from SPX. It's at like 68, 67, something like that. You see how this is bigger? That means that there's more GEX value. We call that weight. I call that weight. That's what it's just called. Notional value. That's a bigger wall than this one. That's a much smaller wall. And this one here, this is a giant gold line because this is the put wall. So this is the biggest negative exposure for ES as the SPX adjusted price. So this is a big put wall right here. So you can see we bounced off that. I don't know if we hit it earlier again today. And I don't know if this shifted either because I really haven't been watching all that much because I had those work meetings. Simon, give me a second. I'll get right to your question. So yeah, you go from wall to wall, but just keep in mind that not all walls are created equal. Sometimes if you have a tiny exposure wall, that's nothing. There's no value there. It's not as weighted as greatly. your major walls, so like the one that's labeled 0 DTE put wall, is going to hold more weight. Your OPEX walls hold more weight. Your magnet walls hold more weight. All right. Stemmen, is it correct in saying that when someone buys calls, market makers sell underlying for balancing? The underlying um underlying stock or whatever. So if retail or institution buys a call, this is not the theory, but this is how gamma exposure works. So let's say party A buys a call. So when they buy the call, the market maker sells it to them. When the market maker sells the call, they are now short delta because calls have positive delta. Hold on. Let me bring this up. I do not, this is Thinkorswim. I do not show delta on Thinkorswim, so I got to bring it up. Give me 1 second. Now, if I just breathe too loud into the delta is here, on the far left. So here we are on SPX. We're at 68.13. So if we go to 68.10, I'm an institution and I want to buy a call. If I buy the call, I will be long 0.55 deltas. So if I'm the market maker and I have to sell the call, when I sell the call, I will be short 0.55 deltas. I don't think it'll show me this. It doesn't show you the delta exposure. I would have to figure out how to set up that ticket to show it. You see, if I sold that, I'd be short 0.55. Now, as a market maker, I'm not allowed to be unhedged. I'm not allowed to have a biased delta, so I got to be delta neutral. So if I'm short 0.55 delta, I have to get to 0 delta. So the way for me to do that, if I'm the market maker, is I got to buy 55 shares of the underlying. So you got it. Semen, you are the man. You are correct. So the second I sell that call to you as a market maker and I'm short 55 delta, I've got to buy the underlying stock 55 shares worth to be now delta neutral. Okay, now here's the kicker part. What happens if that stock price goes up? Is there a way for me to do a quiz in this? Oh, it is. Q&A. Try this Q&A. You can only do 100 characters. So 1 second. That man. Now listen, I am not trying to self-promote in any way possible here because I'm not a salesman. I do this for fun, not making a living off YouTube. I will never trick anyone. Like, for example, again, I do not criticize people. I believe in treating everyone with dignity and respect. But I saw a YouTuber I used to watch. has these videos where he does live trades, and the title of the video said live trade scaled $50 to 1,000. And so I watched the video, and it was him live. Like when I end this live stream, this will be a video for people to watch. So he was live, and he never once made a trade. He's got a bunch of videos that he calls live trade with dollar values in there, like $5,000. Live trade, $5,000. Doesn't make one trade. But what he does is he says, while he's watching the tickers live, is he says, if I would have bought here and sold here, I would have made $5,000. And that's what he puts as the title of his videos, and he gets massive views. I don't do that. I don't want to do that. I will get to the point where I can trade on this, but my job, sometimes I gotta flip off real quick. My job. Anyway, Simon, if you haven't seen this video I'm putting in the chat where I talk about the legal requirement for a market maker to hedge, and then the math behind why gamut exposure makes them hedge, and literally tells you how much they have to hedge. That'll explain it for you. If you have already seen it, cool. Don't worry about that. If you haven't, don't worry about it. If you haven't, check it out, and that should help clear it up. But so that all was it the 6810 that I sold to you? So that delta. So remember, I sold that to you, and I was short 58 deltas. That is now at 50. I was short 55 deltas, so I had to buy 55 shares. So now that delta is 58. Okay. So when I sold you that, the SPX was at 68.12, and now it's at 68.14, so it's higher. SPX is higher. But now, remember, I sold you and I was short 55 deltas, so I bought 55 shares. But now that position is at, it just ticked 59 delta. So now I'm short again 4 delta. So what do I have to do? I have to buy 4 more shares. And the price is going up more. And as the maker, for me to stay delta neutral, I got to buy more. And now we've got a feedback loop, don't we? Uh-oh. So now that we can conceptually and mathematically see what's going to happen to price when price moves based on gamma exposure, we can mathematically use the word predict, even though I shouldn't, but mathematically gauge where price is going to go when based on where the exposure is. Now, is it as simple as that? Absolutely not. Because if it was, here's the thing you got to think about. If it was that simple, everybody be doing it. If you click on a video on YouTube, I'm just being honest with everyone because I believe in honesty. If you click on a YouTube video and the title is the 5-minute opening range breakout I trade to make millions for the last 20 years, if it was that simple, everyone would do it. End of story. If it worked every single time that well, everyone would do it. Anyway, Bray, I have a couple years in the trading market, and what I've learned is the least popular is a methodology or a person you're following the best. I Bray, I ain't gonna lie to you, man. I'm not very smart. I do not understand. I do not understand what you're saying. I have a couple years in the trading, but I want to understand. That's why I'm laughing at myself. I want to understand what you're saying. I have a couple years in the trading market, and what I've learned is the least popular is a methodology or a following. You got to help me out understanding that. Okay, so Stemmen, check this out. Now, remember we were at 59 deltas, so I bought 4 more to get delta neutral, and now we're down to 56 deltas. So to be delta neutral, what do I got to do? Sell, right? Oh, Bray, you're doing great, man. Your English is awesome. I'm not making any comments on that. You're doing great. I did not comprehend what you were trying to tell me, and that's my fault, man. That's all on me. What I meant is, yeah, you're exactly right. It's just trading a picture. Yes, you're exactly right. Correct, not data. I mean, have you ever watched these videos where the people, again, I'm not criticizing anyone. All I want to do is provide data to enhance your trading. That I'll never tell you when to buy or sell. I'll never tell you if something's gonna be, you know, make make you a millionaire overnight. You'll never hear that from me. I just want to enhance what you're already doing and try to provide something great in your trading structure already. But don't you think it's weird that people's like, oh, this look at this supply and demand works every time. No, it doesn't. I watched this. Just go. You can look at any chart and apply that same thing, and it doesn't work every time. But they will find where it does work on the chart, and it's not live, and they'll show you only the ones that work. Like there's one guy says he's been trading for 30 years, and he said, "Oh, you got." There's so many examples I could give you, but it doesn't matter. Everyone's doing great. Everyone's awesome. We're all here to make each other better. Okay. Oh yeah, MU3. There's no way a retail trader can stay delta neutral. Absolutely not. You don't have the time. You don't have the mechanics. There is no way to do it. Not on a millisecond to millisecond basis. No way. Now you could do it like on a a daily or weekly basis, depending on how you like. If you're trading do you have a portfolio margin account versus just a regular margin account, and you are both long and short on. Yeah, you have a long short portfolio. You're not just long, like you're not just long stocks, whatever. Then you can manage your deltas if you're doing it on a daily or weekly basis, but you can't be a day trader and be like, I'm going to stay delta neutral or to do that. Okay. I was working on something. I got to get back. I'll be watching the chat. I'll keep the camera on. Okay. You want to learn? Yeah, Tasty Trade has some great videos. Me and Delta, absolutely. Tasty Trade has a bunch of videos. They've got so many different live streams. Yeah, I like Tasty Trade. They're all super nice. I will tell you, I think, don't forget Tasty Trade, one of the highest commission brokers out there. Don't forget their mantra is trade small, trade often. So don't forget that. All right, man. We'll see you back in an hour. Good luck. Yeah, so Ray, it depends on how you want to use Gex. So Gex is always active, right? Because gamma exposure, remember the math behind it. It is open interest. It's just whatever strike you're at. It's the open interest times gamma times the spot price, and that's your Gex exposure. And your Gex exposure tells how much the market makers have to hedge for every tick in spot price. And remember, for every tick in spot price, the delta changes. And when the delta changes, it changes by how much the gamma was. The gamma was at that spot price, but once spot price changes, the delta changes based on the gamma, and then the gamma changes. So that makes sense. So, if you're zero DTE trading, you can trade SPX options before the market opens at 9:30, but the bid ask is off and the bid ask spread is wide because there's not a lot of participants. Basically, your participants are your huge institutions trading, and you can watch, just pull up your option chain before that. You can watch the volume go, but you can see that the bid ask is not updated fully yet. It's really hard to do that as a retail trader. You won't get filled at what the actual price is, so you could buy and already be way negative. But if you want to trade 24/5, futures are the best way to do it. Oh, I didn't mean there was talking to you, but I agree with the MU that as Vanna and Charm, if we get close to the end of the day, Vanna and Charm kick in, especially after 2 o'clock. That's why you see some wild swings in SPX. Bray, you'd have to outline exactly what. Yeah, we'd have to outline what your trade style is. I'll be right back, everyone.
Something. IPO
Okay, so cap disparity kind of all. How do you think tradable product? Calling it kind of throw. Eyeball.
Space.
Download.
Quite a bit of company.
Kind of a hammered competitors kind of working together because the need.
Tremendous. Turn on that.
of the
Fine.
Stock has been mean, I think and better not. Higher. And all right.
Hey, all right, guys, it's Friday. Looks like a lot of people dropping out, which I get. Everyone's got to get outside. So I think I'm going to close down this live stream and we are going to set things up for next week. Monday, get ready to rock and roll. I got some data points I got to update. I am working on some other things. I have got to get my website finished up. I think I have my vendor license approved soon. I got all the compliance requirements done, which was a big deal. Well, so now that I come on, I got a number of people watching. I will leave this more, but I did finish my coffee and had my salad. My kids have a bunch of friends over right now playing in the backyard. looking good. Yeah. All right, guys. Thanks a lot. You have a good weekend too, user. I will see you guys on Monday morning. If I can get down here in time, I'll do a live pre-market analysis and we'll fire this thing up. All right. Happy trading, everyone.